Volatility, back ratio revolution. Create maximum returns with minimal risk. Again, my name is Don Kaufman, and you are watching a TheoTrade presentation. Oh, the risk disclosure. We're not financial advisors, nor a broker-dealer. We always throw this up here. Listen, I spent 15 years in the brokerage world. It's one of the reasons I threw the risk disclosure up here. I'll talk a little bit about my background here momentarily. We also have a copyright disclaimer. It's mine. It's mine, people. Listen, the other thing we throw up here right off the bat, if you ever need to get a hold of me after this evening, right here, support@theotrade.com. Listen, we use what we call a common inbox. So if you go to support@theotrade.com and you just put Don in the heading, that email will get to me. So I mention that because after tonight, if you got questions and so forth, feel free. You could call. Nobody calls anybody anymore. But if you've got questions, shoot us an email. We also have, chat built directly into our website. And again, our office is based in Scottsdale. It's not like anybody's going there anymore. The office, that is. I have not been to the office since late February now. It's late February. All right. With that, let's get down to it. Listen, this is why you're here tonight. Anytime I would do a webcast, I want you to be able to walk away with very definitive knowledge, something that you can use, something that's tangible. And I always stress that to people because they don't really get that. Listen, if you're going to spend the next, 90 minutes, by the way, I'll probably be 90 minutes. Is that all right with everybody? So come on. There's nothing left on Netflix that you haven't seen. This is the 90 minutes that you're going to spend here. But I want you to be able to walk away with something tangible, something you can actually use tomorrow. You are going to get that here. I'm actually going to go through a huge amount. This is a very, very in-depth presentation this evening. First thing, you're going to learn where edge lies in the markets today. And more importantly, we're going to detail a strategy that turns that edge, and I'll show you the edge, into potential profit. Number two, you can find one strategy with the potential for mass returns with minimal risks. I'm going to show you a tremendous number of trades that I have done. One of the nice things is I'm no longer in the brokerage side of the business, so I can show my account, display my account, and I'm going to do just that tonight. Number three, you're going to discover how you can reduce risk of your portfolio. Doesn't matter if you're long or short. The strategy that I'm going to show you, you can actually use it for portfolio risk reduction. So if you do have a 401k, an IRA, mutual funds, and so forth, this strategy can help with risk reduction in a big, big way. So if right now, I own Microsoft and I'm nervous, markets have rallied a lot, I own some Apple, how do I reduce my risk? I want you to think about that as I go along tonight. Number four, determine one strategy and how one strategy can help in creating really its very high return to risk ratio, even in the most extreme bullish or bearish markets. This is a strategy meant for the extreme, and that'll make more sense here in a moment. And what are the right steps to take, whether you're trading or investing? I stress something here this evening, because this is a little bit of a different presentation tonight, trading or investing, because there are investors. Again, you just own Apple for the long haul. But this particular strategy can help actually reduce risk for investment portfolio. The strategy can also be used, what we term kind of solo, as a trading vehicle. So let's get right down to it. By the way, tonight, stay tuned in the entire time. And again, as I said, I'll probably run about 90 minutes. And I'd like to tell that people right up front, stay tuned to the very end. We're going to provide you what is unquestionably, to me, the most important, indicator that we've ever coded here at TheoTrade. It's the auto expected move indicator. We put a price tag of $497 on it. It's much more than that. It is the most complex indicator ever put together. Literally ever. The indicator has literally changed the way that we view markets. And I'm going to use the indicator a lot tonight. And one of the reasons that we provide the indicator as a gift is you're going to spend 90 minutes in this webcast. And I use this indicator a huge amount in the webcast. It's only right. People are like, do I have to buy it? No, we're actually going to give it to you because it's only right. As I said, I want to give you something tangible, something you can actually take away, something you can use. If you have no clue what an auto expected move indicator is or what it does. Well, here you go. This is actually on the QQQ. So I'm just going to spend 2 minutes talking about this because you're going to see it in action, right? This is, again, it's the QQQ, which is the NASDAQ 100, and the auto expected move, all right, which are these three lines. And you know what? Let me change the color over here so you see it. Okay, those three lines, right? What are those three lines? They're derived from options pricing, and they delineate how far, okay, for instance, the Qs are positioned to move on a week-to-week basis. So, for example, by the way, this screenshot was taken yesterday. I like to give fresh screenshots. Taken yesterday. It was taken actually on Monday. And what occurred is we actually broke above the expected move and we pulled right back into it. And again, I'm going to describe this a little bit more. But these kind of highlighted candles over here, right? Those are breaches of expected move at week's end. And what the study does is it actually helps you determine efficiency or lack thereof in the markets. And it can help you in numerous ways. You can use it for like directional bias. You can use it for strategizing. And you're going to see just that tonight. It will work on any liquid product. When I say liquid, like you want to use it on Google, fine, use it on Google. You want to use it, on spiders, fine, use it on spiders. And the QQQ, fine. Okay, pretty much any stock, okay, that you can dream of. Okay, so I'm going to actually display this in a bit more detail this evening. I think you guys will find it's not just insightful. Again, it's the most important indicator that I use, period, over the last, we fully developed the auto expected move 4 years ago and been refining it ever since. All right, a little bit of housekeeping here before we dive deep into this is, listen, tonight, this is skill set. This is a skill set, and you got to pay attention during the following course material. It's just one thing I just can't stress enough. If you want to pick this up over the next 90 minutes, you're going to have to stay tuned in because we're going to go through a lot. Shut the door, turn off Skype, chat, whatever else might be distracting you. Get rid of Facebook. I shouldn't even say close Facebook. Just get rid of it altogether. Phones, silent mode, kick out the kids. Come on, kick them out. All right. You've been quarantined if you have children, grandkids, right? If you got grandkids, they probably shouldn't even be there. Dog, the dog can stay. The dog can stay. Listen, you took the time to be here. This stuff is important. And as I said, I'm going to go with a pretty good clip here tonight. So this is a little bit about me. My background. I watched order flow for 15 years. And that's in large part of why I'm here. So again, I'll give you just a brief background on myself. I did grow up around traders. I had family that started trading in the 1970s. And I guess, when you're exposed to something, you kind of have an interest in it. So in the 1970s, I had an uncle that was a market maker. And he built a trading firm. And his trading firm had over 500 seats. In 7 years, they built a trading firm that had over 500 seats on exchanges worldwide. In 1992, he sold the trading firm to the Swiss bank. It was actually became UBS thereafter. It was a multi-billion-dollar deal. And people say, how did I end up in this business? Oh, you know what? I had an uncle that obviously was one of the bigger traders ever, and a multi-billionaire. And you kind of get involved in that. And by the way, people always assume, you have an uncle, you must have money. Let me tell you something. Have you ever had an uncle that just oh yeah, let me write you a check? Okay. Doesn't matter how much money they have. They're not going to write you a check, but it interested me in the marketplace. And I had cousins that traded, and I literally was 3 weeks out of college in 98. And my cousin was, come check out Chicago, and it'll be fun for you and so forth. By the way, I was going to go into medical school. I was going to med school. I don't have a degree in finance. I have a degree in molecular genetics. You want fries with that? Anyway, I was thinking about going to med school and so forth. 3 weeks out of college, I end up in Chicago. I started trading there. I say the rest is history, but 3 years after I actually traded in Chicago, I got an offer into a startup brokerage firm. I had no idea what it was going to be. I had no idea, but the guys were like, they're pretty cool. I knew them from the trading floor. And they said, come with us. We're going to start a brokerage firm. You're young, you're stupid, you don't know any better. So come with us. And you know what? I wanted to get out of that professional trading world, and I did so. And I went to work for a little startup company called Thinkorswim, and I stayed there literally from 2001 to 2015. And in that time, I actually built the education division for Thinkorswim. And then took the company public. I was on the executive team when we took the company public in 2007. Then the company was purchased. Thinkorswim was purchased in 2009 was the deal announcement by TD Ameritrade. And then I went on for 5 years to actually run education for all of TD Ameritrade. And at that time, I got access to all the order flow from literally 2001 to 2015 of the most successful derivatives firm ever. And people always ask me, well, what's order flow? Just basically means that I had access to everything that you did, and I could see everything you did. And when I say that, I don't say that, facetiously. We could see everything, and we did see everything. We didn't go into your account and be like, oh, what's Mike doing today? It wasn't like that. We used big data, hundreds of thousands of traders. And I'm going to tell you right now, okay, using big data and hundreds of thousands of traders, we sourced everything. What works, what doesn't work. We could literally go in there and say, subset of people, they're doing covered calls. Are they making money doing covered calls? Go fish, right? Iron condors. These people are doing we could go to any strategy, any product that you traded. We could tell you everything about it. And I'm going to tell you right now, a lot of what you learn tonight and a lot of what you learn here at TheoTrade comes specifically from that knowledge. And I have traded extensively. Okay. But, people are like, oh, I learned this in my career. Yeah. Well, I got access, okay, to what? 7 million accounts for a period of 5 years and an entire division of TD Ameritrade that did nothing, that were like actuaries that actually took all that data and broke it down. We know everything about you in terms of trading activity. And that's in large part what we built TheoTrade on. I still do a couple of media appearances every now and again. This is actually on TD Ameritrade TV. I do TD Ameritrade TV now weekly. But this was actually an in-studio appearance. It's not like one of the weird appearances when you come through Skype. I used to do a lot of CNBC. I try to do a little bit less CNBC. It's not interesting anymore to do CNBC, only because it's just not interesting anymore. They assign you stocks. It's ruined. Ruined, I tell you. Anyway, this is one of the more memorable appearances on CNBC. It's myself versus Kevin O'Leary, the Shark. By the way, I ruin it for everybody, but he's a nice guy. He's a really nice guy. This particular appearance I did on CNBC, I got stuck with Kevin O'Leary in kind of a waiting room for 30 minutes prior to, and we talked for a long time. He's a good guy. All right. I hope I didn't ruin that impression for you guys about him. Let's get down to it. Listen, in markets, in life right now, we're just going through an incredibly difficult time. All right, markets right now, they don't make sense to a lot of people. I know what you think. The market's up and the economy is falling apart out there. It doesn't matter what you think. There is one reality right now, okay? You're in chaos. You are in chaos, whether you want to admit it or not, and you don't feel it maybe on a day-to-day basis. You definitely felt it in March, okay? You had a hangover of chaos in April. Right now, okay, you're just basically in the fog of war. Volatility, though, is good through all of this. And whether that volatility is to the upside, whether that volatility is to the downside, volatility is a very, very good thing. And I'm going to talk expressly about harnessing a lot of that volatility tonight. By the way, here's a fun little tidbit in terms of volatility. When I say volatility is good, like how good? How good is volatility? Like how could it possibly be a good thing? It's apparently the greatest thing ever to have happened to retail traders, because what I'm showing you here, because most people have never looked at this, this is the number of trades done specifically at a company called TD Ameritrade. By the way, TD Ameritrade has more retail traders, more of like you and me than anybody else by far. Okay. They have a ton of retail active traders. And what I wanted to show you that I thought was interesting, because I just, kind of highlighted the idea that volatility is a very good thing. But let me further that with saying this. Take a look at like September, there's October, there's November. The number we're going to look at is right here. That is 810,000 trades being done a day. 800,000 trades being done a day. Now, commissions went free in October and November timeframe. So they jumped from 800,000 trades a day to 1 million a day. And then the onset of volatility. The volatility started to really pick up in February with the corona. Okay, the Rona crash. They jumped up to about almost 1.9 million trades. Check this out. Okay, June statistics have not yet been released. This is May statistics. They're basically at 3.3 million trades a day. Grab that one for a second. It's unbelievable. No one, has ever heard or seen a number like that before. Nobody even thought that was possible. I worked here until 2015 at TD Ameritrade. I'm telling you, no one even fathomed 3.3 million trades a day. And it's all because of volatility. And I wanted you to see it's actually picking up, all right, even as we rally over here. It is insane right now of the number of trades. This is a very good thing for you. This is your opportunity. Like, it is your time as a retail client in this business to shine. And I just cannot stress this enough, because people just get knocked around in volatility. And this is it, people. Volatility, this is your time to shine. This is the biggest opportunity. And before I go any further than this, I'll express this one thought to you as I kind of dive into this. Okay? I'll throw this next slide up here because I love it. This monkey knows volatility trades, and you should too. By the way, the monkey, I'm expressing the monkey as myself. This monkey, meaning me, I know a lot about volatility trades. And the reason I was expressing that about volatility a second ago is simply because, I literally remember saying in 2008, which was horrific for most people. As a skilled trader, it was by far the best year, that really myself, the group we worked with, any of us have ever had. And I remember saying, in 2009, when the volatility started to die down, I literally said, it's over, man. We'll never in our lifetime have an opportunity like that again. I literally remember saying it in 2009. And again, you got to remember at this point, I'm an executive on the team inside of Thinkorswim, which just became TD Ameritrade. I'm literally like, it was like Christmas every single day in that kind of volatility. And you woke up, you're like, this is unbelievable. It got to the point you were exhausted. You'd never see volatility like that again in our lifetime. Here we are. We've already surpassed it. This is already better. What we're actually seeing right now. And forgive me for saying that, because horrific things are going on in the world right now, with the coronavirus, everything. Horrific things are going on. That volatility, though, is phenomenal. It's a once in a lifetime event. It's coming again, and you got to harness that. And that's exactly why I'm going to be talking about tonight volatility extensively. So to kick this off and to start to put volatility to work, you got to understand it. The thing is, people don't really understand what volatility is. Volatility, whenever you ask somebody what volatility is, they go, it's movement, baby. Markets are going up, markets are going down. Listen, that's one definition for volatility, but it's not the definition that I'm going to give you right now. Volatility is definitively risk. When somebody says that market is volatile, they're really saying the market is risky. Wall Street came up with a nice soft term. Actually, volatility doesn't sound like a very nice soft term, but it's a hell of a lot better than saying man, would you look how risky this market is. This is the greatest risky market I've ever seen. Volatility, though, is synonymous with risk. And when we start to mention a little bit about volatility, we are going to talk a bit about options. Now, I said it. I said the O word, options. Okay. Listen, I am not here tonight to convince you you got to trade options. We're going to talk a little bit about options tonight. If you have absolutely, unequivocally no experience in options, fine. It's absolutely fine. Okay. Just grab onto big concepts. Again, I'm going to say this again. You don't have to fully understand options markets. Okay. But you're going to understand that option markets are going to tell you, okay, about the overall market. It's like people will literally trade things, okay, like Apple. And if you do trade Apple, okay, or whatever stock, they trade a Tesla, they trade a Google. I mean, listen, stock commissions are free. They trade everything right now. But if you're trading stock, you have to understand what the options market is saying about that stock. And without it, you're blind. And that's what I'm going to talk to you about. So for those of you that know nothing about options, okay, in options, okay, we have calls and we have puts. And we're going to keep this quick. We're going to keep it simple, right? There's calls and puts. Calls give you the right to do what? Buy the stock. You're like, I don't want to buy the stock. I didn't say you had to buy the stock. You just have the right to buy the stock. Puts give you the right to sell the stock. I don't want to sell the stock. You don't have to. People buy calls and buy puts just to try to make money from it. That's it. Okay. Calls and puts have become incredibly mainstream. So we're going to look at a call option. Okay. And we're going to say that we have a stock. And this is just a quick example so we understand some of the basics. By the way, every example I ever give, I call it stock. And stock is trading, let's say at $200. We're going to look, in this case, at a 200 call. And the 200 call is going to be trading for $4. Sound reasonable? $4. Why is it going to be trading for $4? Because that 200 call has precisely 1 month left to live. All right. So what do we have? We have a 200 call. What's the 200 call give us the right to do? The 200 call gives us the right to buy the stock at 200. Do I want to buy the stock? No. Then why are you buying the 200 call? I'm buying the 200 call because I think that this stock could possibly go up. What if the stock goes from 200 and goes all the way up to 210? I know I'm drawing down, but that's up. Okay. Up is down, left is right, dogs and cats living together. Listen, the stock goes from 200 up to 210. What's this 200 call going to be worth minimum? You have the right to buy the stock at 200. Everybody else in the world has to go out and pay 210. So what's a 200 call worth minimum when the stock's trading at 210? Okay, that 200 call is going to go from $4. It's actually going to go up to the minimum of $10. All right? So I just want you to understand that concept. Now, before we go any further than this, you have a 200 call. And that 200 call, again, I said was trading for $4. Okay, question is, how do you know it's trading for $4? Because the market says so. Right? The market says so. Is everybody okay? But this is the point where I like to pause for a second and make sure that everybody's all right. Because some people understand this and some people don't. But the point that I'm getting, why is the option trading for $4? Why? No one ever seems to question it. No one ever seems to question this. A 200 call is trading for $4. They just say it's $4. It's $4. Okay. Why is an option priced the way it is? Why is it? Because everybody's like, it's this, it's that, it's the Black-Scholes model. Forget all that. All right. Options pricing in the end comes down to supply and demand. If everybody wants this option here, that's going to create just tremendous demand. What do you think the option price is going to do? It's going to go up in value. If there's a huge supply, everybody goes, that's stock. That's a piece of garbage, right? Now, I'm never going to trade that thing. Supply actually drop. You know what happens? The supply is ample out there, and they drop the price. Listen, high risk also equates to higher option pricing. Low risk equates to lower option pricing. What has high volatility? What has high risk? What has high volatility? Right? Like, what has the volatility been lately in the markets? Anybody? Okay, you guys tell me. What's volatility been lately? How, what has risk been like in markets as of late? Anybody? We'll take this is the part where you guys chat in. They're not rhetorical questions, people. So if you look at like overall volatility in the marketplace, okay, it's been really high. That's why I was speaking a moment ago about, it's volatility for people that understand how to harness it. It's phenomenal. It's not about being right or wrong. It's simply it's phenomenal. I like somebody put in there, they go, it's out of control. Yeah, out of control can be a very, very powerful thing. But in the end, you remember that options pricing really does come back down to supply and demand. And that's actually a critical concept. And I'm going to tell you why it's such a critical concept. Okay? Because you're looking at this already and you're like, who cares, man? So what? The option's trading for $4. But you got to get, to the core reason here. You got to get to the reasoning of these option prices mean something. So this is a stock, and the stock is trading at $100. And this is an example that I've just used for years, decades now. And the volatility is trading at 20%. The point that I'm going to make on this particular slide, by the way, this is, if you've never seen this before, unquestionably one of the most critical things to understand about markets in general. You're like, I need a MACD, I need a Fibonacci, I need a Bollinger Band. Forget all of it. Just push it all aside. What you're going to learn here about implied volatility is critical. This is an area that market makers have used literally since options were first traded. And there are certain things in this business that just do not seem to penetrate, to infiltrate down into newer traders. This is one of the most important ones. Listen, here's a stock trading at 100 with a volatility of 20%. Question is, people go, so what, man? It's got 20% vol. Do you understand what 20% volatility means? The options are delineating, okay, movement in the stock. So when the options have a 20% vol, it means standard deviation. You go, what? It means the stock can move from 80 to 120 and should stay in that range 68% of the time. Now, that's the thing. I just jumped through something and people are like, that just blew my mind, man. Listen, volatility delineates stock price movement. That's what it's about. Like when people think of options, okay, you get all kind of like, what do you think of when you think of options? You're like, I think of not having to buy the stock. Other people go, I think of being scared. When you think of options, think about options are actually handicapping stock price movement. That's why options are priced the way they are. What options are really doing is they are telling you, okay, they are delineating how far the stock is supposed to move within a given period of time, period. Now, this volatility is set at 20%. It means the stock is supposed to go up, okay, about 20% or down about 20%. And that's always good. By the way, this is standardized for 1 year. Now, stop right there. You know the stock's supposed to go up 20% or down 20%. By the way, 20% of 100 is $20, right? So the stock is supposed to go up $20 or down $20. What happens if you looked at this thing though and the stock was trading $5? You go, something weird happened. But you know what? As I said a moment ago, all right? As I said a moment ago, so what? Who cares, man? It's supposed to go up $20 or down $20. That's 1 year from now. Yeah, but if you can figure out how far it can move for 1 year, don't you think you could actually divide that out? First, we'll start by dividing it by 12. We could figure out how far the stock can move monthly. Then you could come in here and you could do, basically divide it by 365 and figure out how far the stock can move every single day. That's actually what we term, and this terminology you're going to hear now, it's called expected move. And what expected move can do, it can pinpoint how far a stock is capable of moving within a given period of time. I'm going to say it again. Okay. If you understand options will tell you how far the stock is likely to move with a high degree of certainty. Now, okay, where does the 68, people always get freaked out, 68%. That's just one standard deviation. That's what a standard deviation is. When I talk about standard deviation, you don't have to be a math geek for this crap. You just don't. Listen, in this world, there are there's really, really good drivers. Very few of us are really, really good drivers. Do you see how I categorize myself in there? I am in the top 5%. Then there's really, really bad drivers. Where are they? They're a place called California. That's the bottom 5%. And the rest of us, fit in the meat of the curve. It's like the Midwest. They're pretty good drivers out there. Just kidding, California, because Florida's over here at 0.001%. By the way, if everybody thinks that whatever city they live in has really, really crappy drivers, then we all fit into the category of the meat of the curve. That's just the way it works, right? Everything you do in your life can fit in a distribution curve. But one of the most important things that you can learn today, here, now, you give me a time frame and give me a stock, and I'll tell you how far that stock can move, okay, with a high degree of certainty. We good? Everybody okay? Because I like to pause there for a second and go, breathe, people, breathe. You came here tonight to learn something. You're going to learn something, all right? You're not going to learn about, stock price movement. This seems interesting. Believe me, we have to go someplace. You have to have a little background knowledge before you can actually start to trade. If you understand even the concept of where we've gone thus far, you're going to be okay tonight, right? Just conceptually. Options tell you how far stock can move. Let me say it again. Options tell you how far stock can move. You know what's so cool about options is they literally put a price tag on how far can the stock move in 30 days? How far can the stock move in 60 days? How far can the stock move in 90 days? That's what it's telling you. Like, and people don't get it. And I'm just like, I want to shake them. And I'm like, wake up. How could you trade without this stuff? Now, what a large volatility you have, Tesla. I wanted to bring you into reality. Let's get off the idea of expected move in the context of like, a little $100 stock and a made-up example. Let's get real. Let's actually go into Tesla. Tesla. I can tell you how far the stock is going to move for what? The next 4 days, the next 11 days, the next 18 days. By the way, what you're looking at over here is a platform. This platform, okay, is Thinkorswim. And I actually trade on a couple of different platforms. This one I'm actually showing is Thinkorswim. You'll now see me trade on a few different platforms, but on Thinkorswim. And I took a screenshot over here, especially tonight, because this equation, I helped put it together. And what I wanted to show you here inside of Tesla is, if you've ever seen these numbers, a lot of people, by the way, is anybody actually using this trading application? Just curious. All right. Anybody here using it? Because if you're using it and you've been on it, over here, you've probably looked at these numbers and got, I don't even know what they mean, man. It's plus or minus 106. What it means is in the next 4 days, okay, that stock's supposed to move up or down $106. Period. Up or down, $106. That's what it means. Okay. It basically does all the mathematics for you. And the reason I bring this to your attention is I just want you to understand. Okay. Again, I just want you guys to be able to understand. The further you go out in time, the more time there is to move. Look at this next 39 days. The next 39 days, this stock can go up or down $300. That's huge. Just huge. Now, okay. Now, let's get down to it. All right. Anybody? A lot of people do use Thinkorswim. Okay. How many people here honestly knew how to use these expected moves before tonight? Just a Y or an N. I mean, come on, man. There's hundreds and hundreds of people on tonight. All right. A lot of people. Well, I'm actually going to take a step further. So this is actually a visual representation. This is the auto expected move indicator. Now, again, we're going to give you the auto expected move indicator because it visually displays the weekly expected moves on a chart. And what's really kind of cool about it is if you look, this is where, sorry, I'm getting overzealous. This is where Tesla was supposed to be last week. It ripped a little bit through it. That's where the week ended. It was supposed to end inside this zone. It ripped up to here. Look at where Tesla is now. Do you understand how advantageous this is? You're like, but your indicator says 68% of the time the indicator is actually showing you the marketplace has become wildly inefficient. Time out, because everybody has this look right now. What the hell do I do with this? It sounds like that volatility thing sounds like a real party there, Don. Now we actually got to put this into context of how to use it. All right. I like this. I like this because we get to this point where you're looking at this thing and you're like, okay, cool, man. I see what he's talking about. It was supposed to move $100, but it didn't move $100. It moved massively outside of it. Okay. So Tesla is literally breaking apart, if you will, to the upside. And you look at it, you're like, I don't know how to use that. And go, listen, understanding implied volatility, it's a step in the right direction. It's always a step in the right direction. You had to have that background knowledge to be able to what? To be able to profit from it. In the end, you got to know how the stuff translate into profits. Okay. What you just saw there inside of the Tesla chart, though, with the expected moves, this is what we call a quantitative measurement. Quantitative. It's a mathematical measurement. That's really what expected moves are. I am a quant. So how does this stuff translate into profits? Okay. So I'm going to bring you into a trading concept. Very few people, less than 1% of the market participants are aware exists. By the way, I love to throw out statistics like this, where I say like, less than 1%. Well, first of all, let me quantify this for a second. How could I possibly know less than 1% of the market participants are aware that this stuff exists? Well, my statistics would come from about the last time I had those were about 2015. No one trades this kind of way. They just don't trade this way, okay? Because they don't have what is a very, very simple understanding. You may understand expected move, but they don't know how to translate expected move into P&L. Okay. As I was saying, less than 1% really grasp it, even less figure out how to trade the concept. So here, know your volatility. There's two types of volatility you got to understand. Okay. We have what we term, and a lot of people do understand this concept, but we have what we call implied volatility. Okay. Implied volatility. It's the volatility that sets options pricing. That's when we're talking about that $4 a little while ago, right? It's $4. And then we have historical volatility. In historical volatility, I love these definitions. The standard deviation of the past stock price movement. Listen, implied volatility, okay, is the future, okay, of risk. Implied volatility, it's an implication of future of risk. That's what it is. That's what options are. And you're like, oh, that totally makes sense now because an option's good for a week. It's good for a month. It's good for 6 months. What do you think options are doing? Implication of future risk. Then we have historical volatility. And historical volatility is like looking in the rear view mirror. You know what historical volatility is? It's actual stock price movement. It's like, man, look at that sucker move. It's moving, right? And I'm breaking this down to something really easy right now. Listen, finding an edge and finding the edge. What if the markets continually moved big, really big moves? But options did a piss poor job of pricing in those larger moves. Okay? Would that be an edge? Think about this for a second. An options marketplace, the options say the stock is supposed to move plus or minus $106. Okay? That is the options market. I can't write with this. That says options, I tell you. The options market says we're supposed to move $106. We don't move $106. We move $200 plus, either direction. Right? Is there an edge in there? You better believe there is. Okay. Listen, first of all, how could we go about finding stocks that are moving more than what option markets expected? And it's a big portion of this. Obviously, enter the expected moves. Auto expected move, it visually displays. And there's a lot of different ways to do this, but I'm just showing you visually here. It displays a stock or ETF smashing through what the options market expected. And you say the options market is wrong, okay? You can see a stock moving beyond what the options market has priced movement to be. We okay? And again, I like to always stop and I like to say, you okay over here because this is hardcore stuff. And what I'm saying when this is hardcore stuff is, and what I'll kind of delineate, listen, this is the IWM, right? For those of you that don't know the IWM, which is better known, the Russell, okay? So the IWM is the equivalency of the Russell. It's the ETF version of the Russell. But I'll show you what happened. This is coming into the Corona crash. Breached the expected move, right? This next week, inside. Breached the expected move. The next week, ripped apart the expected move. Ripped it apart. Inside. Ripped it apart. Okay? Inside, rip. Okay? This is a mild breach. Ripped. It just goes on and on and on. You tell me, what other point, okay, in history or there are this many breaches. How many times in a row can the marketplace be this wrong? 68% of the time, we're supposed to stay inside here. We're not staying in there 68% of the time. The market's getting ripped apart right now at the seams, and people don't get it. In recent weeks, months, the markets just continually, they keep smashing through the expected move. The opportunities are massive. That's why I said, like, this is it, people. This is your time. Like, it's your time to shine, baby, if you know what you're looking at with this. Okay? This is outlier moves. This is what we call kind of volatility limbo. All right? What does outlier mean to you? By the way, that's I put this in this presentation, and then I realized I'm like, I never really explained the term outlier. And what outlier actually means in here is if you look at a distribution curve, you're supposed to stay in here 68% of the time, and we're all warm and we're all fuzzy, except we end up here, we end up down there. Outliers are oddballs. Okay? I am an outlier. Okay? I grew up as an outlier. I've always traded as an outlier. Listen, implied volatility opportunities. If you have losses right now, shake them off. This is the time to make money. There are very few opportunities in this business. Very few in this business that present themselves as prevalently as what we are witnessing following the Corona crash. The fallout right now is freaking epic. It's epic out there right now. And you need to get ready, because I'm going to tell you, it is far from over. Far from over. Every indicator that you have that stages volatility is still in the red. Like volatility indicators right now, they're still freaking out. We're still cracking through it. I'm going to show you. Okay? Things are still epic in terms of what we term outlier moves. So we want to position your portfolio for a big move. Big move. But let's get down and dirty. How do you position yourself most effectively for the possibility of extreme movements? But you don't want to expose yourself to drastic risks. Right? And the reason I say this is, obviously nobody wants to expose themselves to drastic risks, but when you're looking for extreme and drastic risks almost go hand in hand. So you have to strategize outside of drastic risks. And please don't get cute. You're going to go out there, you're going to buy stock, you're going to get your head taken off. I'm going to be very honest with you. People go out there, I'm going to buy me some Tesla. Okay? Yeah, been there, done that. How's that working for you? All right? You get on the wrong side of Tesla for one day, you're going to feel the wrath of this marketplace. Okay? Tesla, that's an easy example. Well, you think it can't happen to Apple? Did you see the movement of Apple during the crash in March? I mean, that had to wake up everybody. Listen, there are potentially billions up for grabs. You got to get serious. You got to get down to it. Here is one of the first trades that I want to present. By the way, this is not the only trade I'm going to be presenting. But this is actually a type of backspread. It's volatility backspread. And we're actually going to look at the setup for the trade. So let me actually bring you into scope of what you're looking at if you've never seen this before. What you're looking at over here, these two trades. Okay, first of all, there's an opening trade and there's a closing trade. This is the exact time and date that the trades were put on. Okay, delineates that it's a back ratio spread. This is what we put the trade on for. This is what we took it off. Okay. In this particular scenario, and again, this is a screenshot directly, and a lot of people are on Thinkorswim. I took a screenshot from my Thinkorswim platform. Every trade that I show you tonight, they're my trades. Okay. One of the coolest things now is, I'm 5 years out of the brokerage business. We can actually show you what we do. And this is so I can finally show like account statements and so forth. In the brokerage world, when you're a registered rep, you can't show, you can't say like, oh, this is my trade. Now I can, and I'm kind of liking it. So it took me a long time to get comfortable doing it, honestly, because I hadn't done that for, ever in the beginning of my career. Last 5 years, finally now starting to get comfortable showing positions. This is a trade that was put on for a 20-cent credit. There is risk in the trade. It was actually pulled off for a $6.48 credit. So I put the trade on for a credit. Yes, there's risk. But I took the trade off for an additional credit. So net, what do we actually make on the trade? $6.48 plus the 20 cents. After transaction costs, after everything, what did you really make on this trade? Oh, let's just call it an even $6.60 credit. $6.60. Okay. Now, if you did one, what we term contract, okay, that's $660 of P&L. If you did 10 contracts, it's $6,600 of of P&L, right? That's why I wanted to see it. But what's the setup for the trade? Like, how did I know? How did I know? I didn't know anything. I didn't know anything. All I basically did is look at the expected move. I want you to understand this trade that I'm actually pointing to here, this was done with calls. This is actually a highly bullish trade. It's a bullish trade. Did I know that the marketplace was going to be bullish? No, I didn't really care, because you got to understand, I put the trade on for a 20-cent credit. When I put this trade on, this is a bullish trade, but when I put the trade on, what was the market doing? It was crashing. This was in the middle of the crash. The market's crashing, and I put on a bullish trade. You go, why would you do something like that? The expected move made me. It made me do it. It caused the trade. All right, when I say it made me do it, what we actually had was an anomaly. What's the anomaly? You had 1, 2, okay, 3 out of 4 weeks were breaches to the downside, okay? Right there, done. I put the trade on right here on the 23rd. We exploded back to the upside. That's it. Trade's off, okay? That trade lasted for what? Such a negligible period of time, all right? Look, we put the trade on the 23rd. We took it off the 26th. That kind of credit is phenomenal. But it's not over. It's not even close to over. Here, what's the setup for this trade? This is also an IWM trade. I just kept going back to the well in the IWM. Here, this trade was put on April 24th, closed on April 29th, right? What's the setup for that trade? Well, for that, we're going to go back in here, okay? In terms of April, what I wanted to show you here is that this was an anomaly because we were actually riding 2 weeks inside the expected move. We hadn't had 2 consecutive weeks inside the expected move. So I just literally went out and I go, well, we're inside the expected move for 2 weeks. I'll take a shot. I'll get bullish this next week. Maybe we'll break up, to the upside. That was it, people. That was the setup for the trade. There's nothing beyond that. People go, but what happens if the market sold off? Who cares? I collected a 43-cent credit. The market could have crashed from that point. I still would have kept the 43 cents. But if the market bounced higher, made another $5. This is literally a $5 and 40-cent winner. $5.40 winner. Again, in a really, really short time frame. By the way, every trade that I'm showing you here today, this is done in front of our clientele. So this is Phil V. I closed IWM yesterday at 438. And I want to show you, people get filled at different prices. Phil closed at 438. Jim M., he bailed early, 202. Judd here at other IWM back ratio, out for 213. Corky here closed for $1.93. Len U, okay, closed for 228. Everybody gets varying prices, right? Depending upon how long that you actually want to hold this thing. But I wanted you to understand, this wasn't like, I did a trade in my account and then I hid from everybody. Okay, everybody does the exact same trades. That one was a while ago. But I thought that was a really clean trade that I did a while ago. Let's actually get a little bit more recent. A little bit more recent in this particular case. So this is, when I say a little bit more recent, now we're actually going to go into June. I'm going to take you right into trades that happened days ago, okay? This is the TLT. TLT. What does it stand for? Bonds. I like the bonds. I trade bonds. TLT had a massive breach lower. It was a massive breach. Look at this. TLT was kind of getting edgy here, and it just rips lower. So what did I do? I put a trade on, expecting us to have a rip back to the upside. And by the way, I caught both moves on here. The first trade you're actually going to see is a put spread. So I just want to show you the first trade in here. This is actually a bearish trade. The bearish trade. Now this one cost me 32 cents. Okay, but I closed it for like $1 credit. Now you're not seeing this incredible P&L like you did in the last trade. But you have to understand, this is bonds. The bonds don't move that much. Okay, I'm still generating huge returns. So I caught the trade to the downside, meaning that in this particular case, when the markets broke lower, I had a trade on. I didn't know the markets were going to break lower. I just took the shot. I literally took a shot in this one, and the markets broke lower. But the point I'm saying is, we actually caught the breach lower. The breach lower was so violent that it actually caused me, okay, to put on a bullish spread as well. I just want you to see the time frame. So I originally had opened this trade all the way in April. I didn't close it until June. Okay, June 3rd is when I closed it. And again, what this says for like a 98-cent credit, you're like, so what's 98 cents? Oh, whatever, man. So what? You made 60 cents, 70 cents on here. It's not bad. Okay. Yeah. But the one trade, okay, that I had to hold for what? Over a month, it actually led to the next trade. And the next trade was a little shorter in time frame. And again, we're becoming a little bit more recent here in terms of our trades. This one was actually put on for a 25-cent credit and closed for 210. Inside of bonds, people, this is phenomenal. Nobody gets these kind of returns inside of bonds. The TLT is a rockin', and people are, okay, when I say TLT is rockin', like bonds, they barely move. They've just been boo lately. The slightest movement in bonds, higher or lower though, no one expects it at this point because the Fed is all over the bonds. The Fed is just in the bonds. They're all over bonds. And you know what? It doesn't make a difference. They're still P&L. That's actually why I use this as an example, because nobody even dreamed that bonds could be so profitable right now. Listen, the future right now, it is bright and it's full of risks. Now, I'm not suggesting, okay, that you can time all of these wild moves in markets. You can't see the future, right? But we are suggesting having placed the correct option-based strategies, it'd make all the difference. Like there's no crystal ball in here. That's not what we're doing. I'm going to show you exactly what we're doing. You could be literally two trades away from this. What we are using is termed, okay, an infinity spread. And what the infinity spread is doing, and I'm actually showing you right now what I kind of call the full Monty, okay? What I'm doing in this particular example, the trade has upside potential, okay, but it also has downside potential. And everything in here, minimal risk, okay? Minimal risk. Does this make sense? The P&L graph looks, okay, the way that it should. If we explode to the upside, there's P&L. If we rip to the downside, there's P&L. This is actually a trade. One of them I actually put together here. This is in the IWM. The other one's actually in the VIX. The VIX, what's the VIX? It's the volatility index. And I want you to see in terms of P&L. If the market's tanked a little bit, that trade can make $2,000 or $3,000. You do realize, you're like, oh, $2,000, $3,000. Oh, who cares? That's 2 contracts. That's it, people. This is just 2 contracts. It's not a lot. This is 2 contracts. Captain Two Lot. You walk around with like a cape on your back and I go, I am Captain Two Lot. Okay? 2 contracts. And you could have some real P&L, right? You know, if you have a little bit of a bigger account, and the reason I put in my example here tonight, the reason I put the example as 2 contracts, I want you to understand you have a $2,000 account or a $3,000 or a $5,000 account. You can do these strategies. You can also do them in an IRA. This is my IRA. Every trade I'm showing you tonight, every single trade I show you tonight is in my IRA. So it's an IRA. It's at TD Ameritrade. That's why I'm showing it to you there. And with, $2,000, the P&L here can be massive. But you also have to understand, maybe you have a 401k. Right? And if the market crashes, your 401k is going to get killed. But this strategy will give you protection to the downside. Could you imagine if you did like 10 contracts of this instead of 2 contracts? Make this 5-fold greater. Instead of $2,000, you make it 5-fold greater. All of a sudden, that's a $10,000 bump up in your account with what? Not that wild of a movement. People go, oh man, we can't get down to that level of what? A 110. We can't possibly get to. We were just there. Okay. When I say we were just there, like, no, seriously, we were there recently, people. Recently, we were there. So what I can't stress enough. This is where we're headed tonight. I want you to understand that this is both sides of the markets, but my trades. Okay. So listen, proof is in the pudding. I'm going to display a number of key events surrounding just the last couple of years. I want to show you what volatility can do in the last couple of years, whereby markets and volatility did not effectively price risk. Then I'm actually going to display current trades, all the current trades that I've got on, stuff that I did during the Corona crash, literally right up until pretty much this point in time. Okay. So I'm also going to show you the primary strategy that I'm using to create these opportunities. And I'm going to give you, again, month over month, what I've made, everything in here. When I say that I want to show you some key events, again, when I worked at the brokerage, in the brokerage side of the business, couldn't really show accounts. So I can now. This is the last 5 years. In the last 5 years, there's been like these small glimpses, if you will, of heavy volatility. Glimpses. 2015, 2016. You're going to go, oh, yeah. There was volatility for like a couple of weeks. Oh, yeah, there was volatility for a few weeks here. And that's why I say, like, right now, during this whole coronavirus thing, you realize how much volatility? We had volatility February. February kicked off the volatility. February, March, April, May, June. Here we are in July. We're in the 6th month of this crap. 6 months of it. And I just want to show you, this is the China yuan devaluation of 2015. And you know what's ironic about this? Okay. The volatility tripled in 3 days. It just went from here. The market didn't see the risk coming. Boom! Volatility spiked. Okay. How did volatility help me out this time? As I said, now I can actually show brokerage statements. This, if you look very carefully, I apologize. There's a lot going on the screen. I apologize because it's an account statement. This is directly from the platform, TOS. This is Thinkorswim. This is a 24-hour period of time. It's August 24th to August 25th, 2015. But I just wanted to show you, okay, in a 24-hour period, not huge. It's $17,399.60. Okay, that's in one little spike in volatility. All right, so what? It's a little volatility event. Push that aside. This is the taper tantrum of 2016. Now, the taper tantrum of 2016 was a very fun time. That, people, we actually saw the S&Ps right here. They were trading, about 207. And then they went all the way down, okay, to roughly 180. That's a pretty big move. It doesn't look like a big move in the chart, but volatility kind of doubled in that time frame. By the way, this volatility lasted all the way from January, pretty much, okay, to like the end of February. Is a 2-month window. 2-month window. How did we do inside of 2 months? Because I want to show you history here. You got to understand this. The exact dates are right here, the taper tantrum. This is my account, the account number, everything. This is January 1st, 2016 to February 29th, 2016. Leap year! And the P&L, okay, the P&L of the account was 100,000, okay? Well, 103,780.35, okay? So it's $103,780.35. I made $100,000 inside of a 2-month period of time. By the way, at the time, this, to be fair, this was, and look, at the time, I also lost apparently $14,000 in terms of TD Ameritrade stock. I owned a lot of stock at that point, people. Anyway, the point being over here, 2-month window, this was a non-IRA account at the time. So I made $100,000. And at the time, I had about $250,000 in the account when I started this. So that's a little bit about the account. Moving on, this is actually Brexit in 2016. So Brexit in 2016, what do we have? I mean, we had one down move. That's it. Brexit was like, we saw risk. It was all over. It was all over in like literally like a 24-hour period of time. Here's an account statement from the Brexit time frame. Again, the reason I'm delineating all of these risk events to you, you just don't realize, like people don't get it right now. Here's a 24-hour period of time. This is June 23rd to June 24th, okay? The P&L, I know it's small. I had to fit every single thing in here, but the P&L is $25,000, okay? Well, $25,201.13 inside of a 24-hour period of time. Now, we're having fun. We're still in 2016. 2016, the presidential election. Now, the presidential election, I'm going to go you one better. I'm actually going to show the exact trades. These are the beginnings of true infinity spreads. Okay, when I say infinity spreads, this is where we started actually using the strategy that I'm talking about today. And the presidential election, you know, we had launched Theo Trade in early 2016, and this is where we finally named the strategy the infinity spread. Okay, this one's put on for a $2.65 credit. I closed it for a $19 credit. That's actually one of the biggest back spreads I've ever had in my life. That is a 24-hour period of time. It's not even 24 hours. I put this one on night. This is actually options on futures. Not necessary to trade those. The other infinity spread over here, okay, 70-cent credit, took it off for a $30 credit. You realize that like one contract, the P&L over here One lots, we're talking what? $1,500 to $1,800. Huge P&L. Okay, but these are types of volatility back spreads. Then we come into a volatility event January and February of 2018. I skip forward over here. Okay, this is one that nobody saw coming. This was actually the marketplace in early 2018 was rallying like it would never end, just like it is right now. It crashed and burned. It's one of the biggest volatility events. It was actually at the time was the largest. It was the largest percentage move of volatility ever. Okay, I'll show you the exact trade. Instead of showing you P&L in the account, I'm going to show you the exact trade. This is actually the infinity spread. And the infinity spread, again, was put on January 17th. It was taken off February 9th. I put it on for a $1.37 debit. I closed it for $10.58. So one contract of this thing, okay, is $1,058. That's one contract. If I had done 10 contracts, obviously it's $10,580. The P&L of these things, people, just gets amplified. It's huge. Okay, that's again just one trade that I did in that time frame. I didn't know anything. I mean, it turned into $1.37 into $10.58. It's knocking the cover off the ball. Then it comes into Fed-fueled selling in late 2018. So this is actually the nightmare of Christmas. It's the marketplace actually selling off huge into Christmas. And that particular trade, tell you what, I didn't time that one perfectly. But I've closed out of my trades in October. It's $1.20 debit. I closed out. It's the same type of risk twist trade. I closed out for a $6.59 credit. Again, what I'm showing you since the presidential election on are what we now term infinity spreads. The infinity spreads, though, have an origin, and the origin actually comes from the financial crisis. As I told you, the financial crisis was like every single day was Christmas. It was unbelievable volatility. This, because I was at the brokerage, I worked in the brokerage business at the time, I cannot display the statements, but I can tell you the 2008 financial crisis. This is not exactly a popular thing to discuss, but the 2008 financial crisis, it led to the biggest, 18 months pretty much of my life. And after that, and I show you, this is what I kind of call the financial crisis trade. The financial crisis, although I can't show you the brokerage statements, I can actually show you what it led to. It actually led to the purchase of my home. I don't mind telling anybody this, and again, it's not exactly the most popular thing. I bought the house in July of 2010 for $1.321 million. So I paid $1.3 million. By the way, I bought the house. If it's a weird number, because I paid $1.321 million, I bought it at an auction. Okay, and who's better to stand at an auction than a guy that used to trade in the pits? Stood in the auction and like 1.3 million, 1.321 million, and that's when the other bidder finally dumped out. The house today is actually worth I think it's just a 2.8 is estimate. It's a little low. It's a little low for the house right now, but I'm not going anywhere. I'm not selling it. That's the financial crisis trade, and again, it's not a popular thing to talk about, but that was the origin of the infinity spread. By the way, you got to love the greenery around the house. The greenery. By the way, if you want to know what a $3 million house looks like, it is. It just got painted. It got painted, but that's outside. Okay, this is inside. It's not that color. It's white now. My office. I live up there in the office. Every house has to have a movie theater, and that is an indoor basketball court. Okay, this is no longer a basketball court though. I'll show you that in just a minute. I took a picture. I just changed the basketball court because you'll see it's a coronavirus trade. So it's a fun place. I have 3 little kids too. So if you're curious about the little basketball hoop over here, I have 3 really little kids, 5, 7, and 10. And we spend a lot of time obviously down to the b-ball court. They are tormented right now, and I'll show you why here in a moment. Listen, the infinity spreads, the opportunities are right now. Again, you're 2 trades away from putting this on. This is not a trade that has to be, you just don't have to sit there the whole time and monitor the trade. I just can't stress that enough. Like, you don't have to sit here, okay? There's no timing to this trade. You're going to put it on. You're going to let it sit. Let fly. You're going to rally up huge. You could sell off huge. You're going to take minimal losses on it. and that's okay. Just to also kind of delineate, as I said, and I'll show you everything about these trades. These are actually 5-day net liquidating values. This is actually February. By the way, if you've never seen this, this is part, again, of the Thinkorswim platform. All three of these screenshots are Thinkorswim. It's a 5-day net liquidating value. And I just took some snapshots, okay, of months. So this is an IRA as well. This is an IRA. You can't, that's it. It's an IRA. It's $211,000. I took it to $248,000. That's a 5-day run. Then the account, okay, almost precisely a month later. I'm just trying to show you like 1 month snapshots here. Precisely about a month later, it's 305, okay, up to 308. It's not exactly the biggest week I've ever had, but we went from, I went specifically from $211,000 to 308. The account value, okay, this is just, a few days ago. It's actually, I should have taken another screenshot today. The account's now at about 400,000. So the account's sitting at 400,000. And if you're curious, the trades that brought the account from roughly $211,000 to $400,000, well, here are some of the following trades. Okay, this is actually a trade, and I'm going back in time here a little bit just to show you a little history. This is a TLT Infinity put spread. This is a trade that was actually opened September of 2019. It's been an incredibly good volatility time. It was actually open for a 12-cent debit, closed for a 350 credit. All right, this is actually some of what our clientele are saying. This is the second time I've been to Don's service. It took a while to sink in out spreads, but saving my beep, okay, now and doing them, everywhere when they fit, also using risk twist trade. By the way, the infinity spread has another name. It's actually called a risk twist, okay, on both of my accounts. It's embarrassing to think of the tens of thousands I spent on option info at other classes. Don's classes are the greatest, from Gary M. The reason I threw this in here is, Don, I closed the TLT risk twist. It's an RTS for 127% gain. Price was moving around so fast, I ended up using a market order. Pretty excited to see the whole risk twist, trade cycle and how well it worked, from Vicky M. Here's another trade. This is actually a SPY Infinity back spread. I'm just giving you a quick history before we come into the Corona crash here. This is November, closed in January. It was actually put on for a 3-cent credit, closed for a 304 credit. So for the most part, put on for next to nothing, taken off for like $3 credit. If you did 10 contracts, it's $3,000. Okay, this is a VIX volatility spread. Now we're starting to get to some interesting stuff. The VIX volatility spread. The VIX vol spread was actually opened January 17th. Did I know anything about the coronavirus on January 17th? Sure, maybe I heard about it like once in the news. Nothing. Okay, it was actually closed on February 27th. Put on for $0. There is risk in this trade, but it was put on for $0. No upfront cost. Closed for a $3.75 credit. I'll give you another one. Okay, this is actually a Tesla trade. This is an Tesla Infinity call spread. And on the Tesla spread, because Tesla was wild. By the way, you got to love this. And I only threw the Tesla trade in here for this. Do you realize this is back in December? The stock was only trading at the 350. I put on for a 20-cent debit. I closed it for an $11 credit. Like one contract, people, is $1,100. You do 10 contracts, okay, you're $11,000. When I add another $0 to that one, okay, it's insane. By the way, on the Tesla spread, after this one, and I had a couple of different Tesla trades that went extraordinarily well. After this one, my partner here at Theo Trade, he's like, you have got to go out and buy a Tesla, given the fact that it just paid for the Tesla with the Tesla trades. And you know what I said back to him? I go, it's in my IRA. I'm in my mid-40s, man. I can't take money out of the IRA to go buy a Tesla. He's like, you got to go out and buy a Tesla. I humored him. I literally test drove it, and I was like, that is it. Okay, if you've never driven one of the cars, I highly suggest you check it out. I say put your trading account in ludicrous mode. I highly recommend it. Mine comes with one of these. I don't know if yours does, but that belongs to me. I may or may not have used the autopilot with the child in there to back the car up. He was very amused, and it looked like he was driving. Don't even worry about that, but you can actually drive the car from your cell phone. It's worth trying out sometime. Okay. Objects in mirror are larger than they appear. He enjoyed the ride over here, but yeah, that car it's unbelievable. There's a reason the thing is like a $1,400 stock right now. And there was a bunch of different back spreads I did on it, but I wanted to include that one. Now, we're actually getting into the coronavirus crash. This is part of the coronavirus crash where I started to really hit it and hit it hard. If you want to see the trades that took the account from 200 grand to basically 400 grand, this is $180 invested. I got back $1,053. It's a 485% return. Okay. And again, there's going to be a lot of these particular trades. When I said, that the volatility really kind of kicked off in the February timeframe, I'm not kidding. I didn't know anything on January 14th. Nothing. I always put them on. I always have these trades on, and I can't stress that enough, right? So this is an XLF risk twist spread. The XLF risk twist, I put this on, okay, December 20th. There's no coronavirus December 20th. It wasn't even on the news. 36-cent debit, closed it for $1.35. Doesn't sound like a lot. Doesn't sound like a lot. People, it's a $30 product. Every 36 cents I invested, I got back $135, $275 return, or 275% return. Okay, if I did 10 contracts, it's $1,350, but I would only have $360 up front. That's it. Okay, it's just nominal amounts of risk. This is an XHB. Now the XHB, at this point, I was knowing about the coronavirus, right? Every $53 I invested, I got back $362. It's a 583% return. And as I said, from this point on, it was on. Like, I could see in February the risk literally on this particular day started to explode, and the marketplace just didn't give it credit enough. The XHB risk twist was the beginning of an unbelievable streak. This is one of the largest percentage returns I've ever had on an RTS spread. It's a 1,225% return. Literally $96 invested. I got a $12.72 credit. $96 invested. I got back $1,272. You realize you do 10 contracts, it's $960 to return $12,720. It's insane. Okay, I'm telling you, this is just into March. It just gets better from here. I go into the TLT back spreads. This is actually what 25-cent credit for a 210 credit. I showed you a couple of the IWM trades. I wanted to show you really recent stuff that I've just closed the last couple of weeks over here. This is EEM. 18-cent credit, closed it for $1.07. It just keeps hitting. Here's another one in terms of the financials. The XLF. May 12th, closed May 27th. I opened it for $0, closed it for a 51-cent credit. Again, a 51-cent credit doesn't sound like a lot. It's on a $22 product. There's nothing to it. I kept hitting it in the XLF too. The XLF has been one of the hottest products we've actually had. In the XLF, closed this one, basically in 2 days. 25-cent credit into another 26-cent credit. So that's another 50 cents I pulled out of it a couple of days later. And again, I'll remind you, everybody is along for the ride. Okay? This is John Haggerty, 570% gain, onward. All right? XLF back ratio was a big winner. This is June 5th. All right? Don, okay, new here. XLF and Baidu back ratios, batting 1,000. Close my XLF. Thanks, Don. Randall Archer, I got an XLF at 204. This guy smoked me. He absolutely smoked some of my trades, right? So here's actually another XLF trade. Apologize. This one's XLE. XLE, which is the energy sector. Put it on for a 5-cent debit, closed it for a $1.35 credit. Again, I'm throwing you trade after trade after trade after trade. There have been very, very few losers in here. And a loser is, I'm going to lose 5 cents. Okay, I mean, it's been so nominal. This is also the Microsoft back spread. This one's really recent. So Microsoft has been exploding to the upside, so we took advantage of it. 76-cent credit. We put it on for a 76-cent credit. And again, it has risk. Closed it for a $5.40 credit. Okay, that one actually just closed, 2 weeks ago. And as I said, we kind of take everybody along from the ride. John Nolan, I sold one Microsoft. This is, by the way, BR stands for the back ratio for 550. Omar closed his. And again, look at the dates, June 23rd, June 23rd, June 23rd. Look, I closed the trade June 23rd. Okay. This was 8:46 in the morning, 8:47, 8:46. I just copied these out of this. I closed my trade. All right. Then texted it out to everybody. And everybody's chatting in there. You're like, hey, Jerg over here, put on 4, wiggled out a $2 to $300 range, and let this one work like a charm. Okay. By the way, this is also what I call the corona. This is the coronavirus trade right here, the Microsoft trade. I have destroyed my children's basketball court. My wife won't let me go to the gym anymore. By the way, I apologize for the. I just took a picture of this the other day. We literally just built this in the last 2 weeks, and I have to go back down there tomorrow. This is they're getting ready to place the floor down. They have to put a floor down for the thing. So the basketball court is done. I bought a gym. I bought the entire gym. I bought everything from the gym, every single piece of equipment, because I am that nuts, and filled all of, this is about 1,700 square foot of a basketball court in here. By the way, the picture was taken using the panoramic of an iPhone 11. I'm very amused by this picture over here. Here's a little bit about what our members are saying. Captain David, okay, I wanted to give you some recent stuff over here. Captain David, I'm out. SPY 76%. Okay, and the plus day on this is actually on the ES. Thank you, Corey and Don. Okay, Ali, I made good money in the QQQ. 354 out at 858. All right, that's June 24th. June 24th. All right, help me pay for a 1-year Theo Trade subscription in the QQQ. I put both of his in there. Jamie G, July 2nd. Happy 4th. Nice $190 profit on the SPY put. Okay. Then I threw this in there. Jamie G again. This is on June 24th. Same guy over here. A couple of good trading sessions. Out for 752. Diamond. Don, you're amazing. All right. Anytime a beautiful woman says that, you have to throw it in there. Ali. Okay. This is Lee Ali. Made $1,458 today with the techniques learned at Theo Trade. Thanks, Don and company. By the way, that's today. We had a really good trading day today. Pablo. Thanks, Don K. Nice profits. Have a great weekend, everybody. Again, I just wanted to throw, a couple of, what our members are actually saying kind of live in the chat room. Listen, the strategy that I'm showing you here today, the infinity spread. I don't want you to get lost in all the examples over here. But all the trades that I've shown today, they're just displayed live at Theo Trade. We text this stuff out to people. But the trades that I'm showing today are very hands-off. Okay, this is not like intensive intraday trade. Okay, the infinity spread uses set and forget order types. You can actually use, when I say set and forget, I'm actually talking about good till canceled, right? You have a fraction of the time. Just put the trades on. Okay, almost all those infinity spreads I shoot out in text messages, and we do that because we realize that not everybody sits in front of screens all day long. Kind of ironically, like right now in your life, you got more time probably than you've ever had before. Even if you're retired, you're not going anywhere. I mean, if you're retired, you're definitely not going anywhere. It's not too exciting to go out there these days. It's just an unbelievable time. You actually have the time to sit down and learn this stuff. Listen, the characteristics of the infinity spreads, okay? Listen, what can you do with this? They increase in value, okay, when exposed to heavy volatility. Increase in value when the markets sell off or rally huge. Significant profit potential in downside market move. They also have a significant profit potential in an upside market move. Remember, the profit and loss graph looks something like this. There is a very, very mild amount of risk in these trades. Loses minimal capital if we drift or remain flat. Only be placed a few times a year. I mean, this is not something you have to sit on all day. I've opened and closed a couple of trades here, but I'm showing you like this trade in IWM down below. It's for August. The VIX one's for September. The VIX one, okay, this is one literally put together today. I mean, this is an example for today. I put it together today. I'll show you. That one, it sits out there. What do? You close it. When? That's the key in here. All right. So this is perfect spread, though, to reduce risk of a stock portfolio. Or for those of you looking for large returns, one thing I'll stress, and I was talking about this early on tonight, is that this doesn't have to be active trading. This could be somebody that has a 401k and says, this trade is done to protect the 401k, to protect everything in your life savings. Or you may have just like a $2,000 or $3,000 account. Say, I want to grow my account. Or maybe you have a $250,000 account. You want to do a little trading in it. Use these infinity spreads, right? So you have to build the infinity spread. Now, I'm going to say this a few times, and I've said it a few times tonight. Just do not let options intimidate you. It's something that it drives me crazy at this point in time. And what drives me crazy is, okay, options become incredibly mainstream. Everybody's trading them now. And that doesn't mean you should too, but I'm telling you, used correctly, used correctly, options can be the quickest, the fastest, the safest, the easiest way to get where you want to go in this business, in the marketplace. But you have to use them correctly. Like the spread below is done for a whopping 6-cent debit. Like I didn't do anything spectacular below. This one, look, there's a credit and there's a debit. There's two trades in here, credit and a debit. And it gives you, again, both sides of the marketplace. But you got to understand that the spread below, you got to use it right. This thing is like a massive chainsaw. If you don't know how to use a chainsaw, bye-bye arm. The same thing is true with options. If you don't know how to use options, you're probably going to cut off a couple of fingers, maybe an arm, but you got to use them right. And used right, okay, it's clean, it's beautiful, and they're really incredible in terms of the returns, right? But this is what you need to successfully create infinite possible turns with minimal risk. I mean, this is what infinity spreads are really about. You got to know when and where do I place my infinity spread trades. When I say when and where, like when and where, right now, you know something. Vol, which is volatility, is really, really high. Okay? When volatility is high, you're not going to be able to go out there and put on one of these trades in the midst of chaos, right? You have to actually be, a little bit careful on how you put the trades on. So you have to seek out, kind of hunt these trades. But we text them out to you. All right. And you're going to see a lot on that front. It's not so much like, I'm going to go place one today. I'm going to place one today. You got to understand, if the market's tanking, then everybody knows that the market's tanking. Do you think you're going to get good pricing if the market's tanking? Does that make sense? Does that make sense when I say you think you're going to get good pricing? Anybody? Okay. Is anybody going to give you a good price, right, if the market's absolutely tanking? Of course not. You got to put it on before the market tanks. Well, lately, there's been a massive rally in this marketplace. With a massive rally, I think it's opportunistic, right? How often should I place these infinity positions? Do they need to be continually monitored? Well, first of all, they don't have to be placed very often, because once you get them on, you can leave them on. They don't have to be continually monitored, because you can actually use an order type, okay, called a GTC. That's a good till canceled. The good till canceled will get you out at a very specified price. How do I set up the trades? Okay, and what's the correct market volatility to place the trades within? When I was talking about this a moment ago, the volatility. You don't have the volatility, you don't have yourself a trade. You can't just go out there and it's like buying insurance on a house. Okay, it's buying insurance on a house when you can see smoke coming off the house. And I'm not talking about smoke out of the chimney. I'm talking about clearly the house somewhere is on fire. And you're like, can I buy insurance at this point? That's not a good idea. Again, you got to know exactly, okay, when to put the trade on. Now, do we need a large amount of capital in my account to do this? Absolutely not. $2,000 in the account, you can do this, right? And you could do it in an IRA, okay? What underlyings, stocks and indices make the best candidates? You saw me use the TLT. You saw me use, the IWM, a couple of other products, including Tesla and the spiders. But what other candidates? Could you do this something on like Roku? Could you do it again on Tesla? Because Tesla's completely insane. You got to know, okay? You got to know, how do I know when to get in, when to get out, right? What prices, what percentage returns? In fact, what are the percentage returns supposed to be? Can I do this in an IRA or retirement account? Absolutely. That's important that you know that you could do this in an IRA or retirement account. How do I size trades for my account? And I think this is one of the most underutilized, areas of the marketplace. You have a $2,000 account versus, for instance, a $200,000 account. This is a vastly different size, trade. You got to know precisely, based on the account size, how many of these do I do? Okay. Then you have to determine what's the right amount of risk for you. Like, are you tolerant of risk? I don't care if you have $250,000 in your account. It doesn't matter to me. I don't care if you have $2.5 million in your account. Right? If you don't understand the risk in there, you got to tailor this to you. You can't get punchy about risk. Once you can look past risk, you can become impervious to markets. Then you got to figure out, how do I build the infinity spread? Some of you are like, I think I can figure that out, but you can't, because you got to know the right volatilities. All right? You got to know what's called the right delta. Again, this is what we do here at TheoTrade. And when I say, let me show you what we do here at TheoTrade, what we do here, we create recipes in trading, right? When I say recipes in trading, we actually create a step-by-step, like literally, like you want to bake a cake? You got a recipe. That's a good pie. I probably could bake a pie if I had a recipe. Actually, I know I could bake a pie. I followed recipes, for years. I did a degree in genetics. All we basically did is followed recipes. Little of this, little of that. Before you know it, they give you a degree in molecular genetics. That's it. It's the whole thing. Trading is the exact same thing. I mean, you have to have some type of recipe. And the irony is most people don't. They don't have any type of checklist. They don't have anything. I mean, what trading really comes down to, it's about answering the what ifs. Okay? What might be a good infinity spread candidate? What's the correct options expiration? How much capital do I commit? When should I execute the trade? What strike price options do I buy? How many do I sell? What's the delta of this? Like, we have those answers. So what we do here is we build recipes with definitive criteria. They're checklists for each strategy and then each unique variable that you're going to encounter. So I stress this a little bit and I talk about, checklists, but it's the same thing. You hop into a plane. If you're going to fly that plane, the first thing you learn to do inside of an aircraft, they go through a checklist. Almost everybody in here has flown in a plane. By the way, the plane, that's a terrible analogy right now. Everybody here has gone in a plane. Maybe not this year, but if you've ever been in a plane, you look at the pilot, and they usually have the cockpit door open at that point, and they're literally sitting there, either with an iPad. They use an iPad a little bit now, but old school, they still have checklists and literally go through this checklist, pre-flight checklist. Do you have that for your trading? And then once you actually get into a trade, it's probably even more important. Getting into the trade is one thing, but even more important, you have variables when you get into the trade. What if the stock goes up? What if the stock goes down? What if a dividend is coming? What if expiration is coming? Like, how many different variables could possibly happen to you inside of a marketplace? It goes on and on and on and on. What if? That's what we do here. Okay, we answer the questions. We'll give you the right probability for the trade. How many option contracts for the account size? We'll give you when to close it. What if the stock sells off big? What's the correct return for the strategy? What if we rally massively? Can you fix a losing trade? Again, dividends coming, expiration. It's the how, it's the when, it's the why, it's at what price. It is just the beginning of the variables, though, you're going to face while trading these infinity spreads, right? I mean, literally, it's the beginning of the variables. This trade, it's phenomenal. But you got to do it. You got to do it right. Listen, you can read anything right now about what a spread is. You can go Google. What a spread is. You might even know how to build different types of what we call ratio spreads. Everybody can Google what a ratio spread is. Everybody can. And 10,000 pages will come up in Google. This is what a spread is. But what you need isn't to Google the strategy. I just gave you the strategy. I'm even going to give you the indicator. Right? We're giving you an indicator for this type of trading. What you don't have and what you absolutely need, you need the recipe for success for infinity spreads. You need the checklist. And that checklist comes literally from 20 plus years of trading experience. That's just me. Okay. But I also had access to client order flow for 15 years. I viewed and studied millions of trading accounts. Okay. And I ran education for 15 years at a firm with the largest order flow in the industry. And obviously, I'm showing you all the different trades based on that criteria. Like, you need to walk through a structured set of criteria, different variables, okay, answers to what to do inside of trade. Like, criteria becomes the recipe for success. Like, the following strategy and the criteria, it does require the utmost attention to detail. Like, you got to go through the first couple times you do this. Like, if you baked a cake for the first few times, you got to read the recipe. By the fifth or sixth time of baking that cake, you're like, oh yeah, I remember this one. You start using like a Cliff Notes version of it. Listen, we spent years, and I say we, the infinity criteria didn't just come from me. The infinity criteria came from a very large team of individuals that we work with, which I'll introduce here momentarily. But we spent years fine-tuning this trade setup. Okay. When you actually approach the section on criteria, you follow the steps to build a trade. Okay. We have a course that breaks all of this down. It's maximum returns with infinity spreads. Okay. The course is actually broken into two separate classes. I happen to be the trade instructor for this. Okay. The classes are the Volatility Crash Course. Okay. It's a 2.5-hour course. It's available immediately. Because of the complexity of putting together the class, we actually make it available immediately, meaning that we record it, we edit it, we get it ready for you. Then we also have the Volatility Backspread course, which is a 3-hour course. It's also available immediately. Like, you can actually download it tonight. The slide decks, though, that include the entry and exit criteria, which is the checklist, right? It's available immediately for download. By the way, you can also you can view these courses. You can view it obviously on a website. But we also have a mobile application. So TheoTrade, we have a mobile application for both iOS and Android. And what that allows you to do is you can actually watch the classes on an iPad. You could watch the classes on an Android phone, whatever it does it for you. And you can even download the class itself onto the device and watch it when you're not internet connected. No problem whatsoever. Again, what is unusual about this class, though, what's very unusual about this class, there are two different pieces to the class. There are two different pieces. One of the pieces of the class is understanding the downside. The other one is understanding the upside. Remember, there's an upside component and a downside component. That's why we actually broke it into two separate, subclasses. I know you're like, oh man, I gotta listen to 5.5 hours of this. It's worth it. You think it's worth it? You hit one trade, and it's gonna be worth it. The class, it's $497. Now, before I go any further, it's $497. One trade hits, make more than $497. But I'm telling you, you come to this class because you want to understand this business better. And before I go any further tonight, yes, we offer a course to you. In fact, it's two courses, but I like to, at this point, differentiate TheoTrade from anything you guys have ever done or seen before. I'm just curious, how many of you, this evening joining us have ever taken a course somewhere? Because most people have. And again, there's a reason I do this stuff live. I like doing it. I like showing off some of the trades that we've put on recently. We've had an incredible track record during the Corona crash, but how many people here have taken a course anywhere? It doesn't have to be here. So I've been on the brokerage side of the business, but I built the education division of Thinkorswim, and then I went on to run education at TD Ameritrade. And I'll tell you, from 2001 to 2015, I've seen it all. I've seen it all. People, they sell you a class, and you take a class, right? And you take the class, and you have to pay what? $500 for a class. So you pay $500 for a class, and then they charge you for an indicator, right? So you pay $500 for the class, and then they charge you another $500 for an indicator. And then after you pay the $500 for an indicator, then you have to take a class on how to actually use the indicator. But then it gets better. Then they're actually going to charge you for a chat room, and the chat room is going to cost you probably $200 a month. Listen, we've been in this business a long time, all right? We know the business extraordinarily well. We didn't build TheoTrade that way at all. And I want you guys to know this. We are not here tonight to sell you a class, And we're going to provide you some really phenomenal bonuses with these classes. What I'm getting at over here, and what I stress to you, TheoTrade is not about one class and kick you out the door. As I told you, we text message people trades, We support people. Like, you can email me after tonight, right? You take a class and you can email me. For how long? I'm going to get into that here. I cannot stress to you enough. We're not about one class, one indicator, What we do here at TheoTrade is we provide you everything. Everything that you're going to need to trade or to invest, Anything that you want to do in the marketplace, will be there to support you. And that's what I'm going to describe here in a moment with these bonuses. I just want you to understand right now, this is not about a $500 class and kick you out the door. This is about, you wanting to learn this business, be in this business, and we will see it through whatever that takes. And that's what's important here at TheoTrade. This is also the point where I'm going to tell you there are 6,000 active participants now inside of TheoTrade. That's 6,000 people that get that text message and put on these trades. There is no one even close right now to the size and the magnitude of what we do here at TheoTrade, and I'm going to show you why. Before I get into some of the bonuses, I want to give you the curriculum for the class. And again, so the class, All right, you got, 5.5 hours of class. You can download it. You get that. Hang with me here, okay? The Infinity Spread, the workshop curriculum. So you got to go through and understand like the curriculum. We're going to show you how to construct infinity spreads, right? Then we're going to show you how to build your own infinity spread. So we take you through structurally what the trade is, right? Then we actually show you how to build your own stock, index, ETF with the criteria, detailed criteria, entry and exit. Then we show you how to build the infinity spreads with your bullish, bearish, neutral. Okay, how to hedge your portfolio. For those of you that have a portfolio and you're worried about your 401k, there's an entire section on this. Okay, it's a volatility sensitive strategy. We're actually going to get into detail of when to open, when's the best time to close, the tools and strategies for analyzing market conditions. This is actually a cool little bonus in the class that actually shows you how to use the expected move for much beyond the infinity spreads. How to create trades based on movement and market volatility, not about direction of the marketplace. These are volatility-based trades. How to generate really big returns at a small account, but it's also, this is fine for a retirement account, minimal options experience, minimal risk. And by the way, if you have no options experience, don't worry about it. Okay, we'll ramp you up. Again, we don't just, here's a class for $500 and go to it, right? We'll tell you exactly what strikes, what expiration. We'll give you the highest probability of success in these trades and why infinity spreads are perfect for part-time traders. You just don't have to be glued to the screen. There's also one little kick to this, the infinity spread. So you go through these classes and you're like, I don't even know where to start. How about this? We actually do a weekly video. I do the weekly video now on infinity spreads. These are 10-minute weekly videos, all right? And we do this weekly video. We just keep you updated on what we're doing with the infinity spread week after week. So if you miss something, you don't have to sit there all day. You're like, did he text me yet? Why haven't I heard from him? We don't do that crap. We'll text you when it's time to trade. But if you miss it, you don't have to panic. These are not like panic trades. Like, I got to get in, I got to get out. Okay. The infinity spreads, well, watch a weekly video. It's not on a Friday. You could place the trade on a Friday. You could place the trade on a Monday. Like, we get it. This is a huge portion, though, to your success thereafter. After you take a class, you can't just get kicked out the door. You have to have somebody hold your hand. Now, that's where we come to this. As I said, we kind of get this business. TheoTrade, we go beyond one indicator, one class. Like, we understand that people want everything to trade and invest, and you want it at one place and one price. The first bonus that we offer, okay? So here's the first bonus that we offer. It's bonus number 1. We give you access to over 93 trading classes. That's from now, right now, okay? All of the classes are accessible to you. When I say all of them, we launched TheoTrade. I left TD Ameritrade in 2015. We launched TheoTrade in 2016. In that time, we've actually done 93 classes. You'll get access to every single one of them. Why? Because it's the only thing to do. It's not about the right or wrong. It's the only thing to do. People that charge $500 per class is because they need the $500 per class. We don't do that crap here. Okay? We just don't do it. We give you access to everything. Why? Because we know the classes are so far beyond. I don't care if you could pay $20,000, and go sit with this professional trader. No one is even going to come close to the curriculum that we have here at TheoTrade. I will put any of our courses, okay, through that test. And I mean any of the courses through that test. There's nothing that even comes close. I'll show you why here momentarily. Of the 93 courses, here's just a couple of them. Obviously, you have access to infinity spreads. That's worth $497. Then we give you Guide to Surviving and Thriving in Extreme Volatility. That's $497. An additional class in volatility back spreads, small account growth with in-out spreads. Right here, in-out spreads, that's been the most prolific class ever taught at TheoTrade. It's actually a class that's probably been watched, okay, more times than any other course in pretty much the history of this business. I think there's something along the line of 53,000 views of just this particular class. Growing a small account with black book spreads, how to collect income being short. Okay, next, this is actually the risk twist spread class. Guide to selling high probability spreads, iron condors for income, selling premium and minimize your risk. There's a day trading class. We have multiple day trading classes, covered calls for income, essential skills for consistency and income, top 10 skills for growing a small account, pairs trading. I'm just giving you a little smattering of some of the courses that we actually offer. In fact, in a minute, I'm actually going to show you, okay, our site. Okay, and when I bring up the site, I'll let you see some of the classes. Like this is like the class archive. There's option classes and option newbie classes. But before I get there, like I just got to stress to you, we're giving people like it's 93 classes. It says access to over $9,000 in classes alone. It's way beyond that. Okay, we put a $9,000 price tag on it, but each one of these classes, again, $500. People charge $500 for a class. Okay, tell you what, it's a deal. Okay, it's a deal, and we're going to give you unbelievable access from day one to it. By the way, I personally did not do all 93 classes. People always ask, they're like, how did this guy do 93 classes in 4 years? I didn't. This is actually our crew here at TheoTrade. So this is a group of, there's 6 instructors here plus myself. So we're 7 full-time instructors. Just to give you a quick introduction. First, Jeff Bierman. Jeff Bierman is also a professor of finance at Loyola. He moonlights with us here at TheoTrade. So he goes by the name Professor Bierman because he's a professor of finance. He's actually now teaching the graduate program in finance at Loyola this next semester. Fall semester would be it'll be his first semester in the graduate program there. Jeff he worked with me directly at TD Ameritrade. If you've ever been on the Thinkorswim charts, I think you owe something to Jeff Bierman there because he built over half the studies in the Thinkorswim charts. Next on the list, Matt Williamson. He's our market neutral. He's a premium selling strategist. That's the guy that if you want to learn to sell some premium, okay, if you understand what that means, fantastic. Matt's your guy. Matt is also very technical oriented. When I say technical, I don't mean technical analysis. Matt's into spreadsheets and so forth. He is a resident option geek. If you're maybe from an engineering background, mathematics background, you're absolutely going to love Matt. Next on the list, Corey Rosenblum. He's our senior strategist and resident swing trader. Intraday traders, listen carefully. Corey's your guy. Tick divergences. He is phenomenal on an intraday basis, constantly posting in our chat room throughout the course of the day. Next on the list, we come to Brandon Chapman. Brandon is one of 3 CMTs here. So something I should have pointed out, CMT, it's a very difficult designation to get. Corey has one. Jeff Bierman has one. There's only a few thousand CMTs in the entire business. We have 3 of them on our crew here. Brandon Chapman's macroeconomics, technicals, and fundamentals. By the way, Brandon also worked with me at TD Ameritrade. I'll tell you a quick story about Brandon. Brandon wrote the educational component to TD Ameritrade. There was a course that was taught at TD Ameritrade, and the course at TD Ameritrade was 18 months long. An 18-month long option course, and it cost $24,000. I bet somebody in here had actually taken it. They literally paid $24,000 for an 18-month course. Brandon, he wrote the book for it. And one of the reasons that I love Brandon here is Brandon obviously worked in the education group. Brandon will tell you what we do here at TheoTrade will absolutely smoke it. I mean, for $497, we will smoke what used to cost $24,000 for 18 months. We have much more here. Okay. Next on the list, Steve Slim Miller is a 43-year veteran stock options and futures trader. Slim, I kind of grew up around him, like known Slim literally since I'm a kid. Slim has probably forgotten more about trading than most people will ever know. But he was actually trading options before they even had puts listed. Last on the list over here, but definitely not least, Tony Rigo. He's our intraday strategist. What does that entail with an intraday strategist? He trades NASDAQ futures all day, just setup after setup after setup. He literally trades throughout the course of a day. If you're that kind of individual, you'll follow a little bit of Tony. Everybody has their own genre of trade, and that's how we actually come to 93 classes, and we give literally access to all 93 classes tonight. You can watch any class that you want out of those 93. I mean, it's like walking into like Netflix for traders. And by the way, I just pulled up the Start Here menu. You know what the Start Here menu is? Like, I don't even know where to start. So we came up with this idea. We called it Start Here. But in terms of the classes, there's a lot of them. Don't get overwhelmed yet. We're not even close to done, right? There's the instructors. Here's the fun part. Here's bonus number 2, okay? Bonus number 2. We're going to give you an all-access TheoTrade VIP membership, okay? It's free. It's for 3 months. What I'm saying is you get access to everything that we do for the next 3 months. It's unlimited access. We have a live trading room. As I said, a lot of people, they'll charge you $500 for a class and $500 for an indicator and $500 for this and $500 for that. Well, guess what? We'll charge you $497. We'll give you 3 months. Okay. We'll give you access to what? 93 classes, but we're also going to give you access to our trading chat room. We're going to broadcast for a minimum of 6 hours per day. We give you real trade ideas, real-time market insights. We trade live. Okay, by the way, we don't even email out the trades anymore. We now text out the trades. We have 5 different portfolios. We have daily coaching sessions. Okay, daily coaching sessions is continued education, timely topics, stocks, options, and futures. And probably one of the biggest values here, because some people say, I can't watch 6 hours a day. I actually work for a living. That's fine. By the way, a lot of people like work, kind of listen to us on the side a little bit. It's kind of scary. I got an email the other day from a gentleman that happens to be a surgeon, and he's like, yeah. Sometimes we just stream you. We just stream you, right into the the pre-op, and he actually may have said the operating room, but I tried not to read that part. So there's a trader actually listening to trades, and apparently yelling to individuals about those trades. But one of the most valuable things in here, we will answer your questions via email. In the 3-month period, when I say we'll answer it, we will answer any question. And I'm not talking about, somebody that's, just push you off. We will answer your questions via email. The turnaround time, okay, is a max of 24 hours. We'll answer your questions via email. That unto itself is worth $1,000 for the next 3 months. You can come in there and you can bounce questions off us. I put a lot of weight into being able to answer your trading questions because nobody else does this. No one does this. Listen, most of our guys worked in the brokerage industry. We know how to answer trading questions, okay, through email, and we do just that. Not done. That's bonus number 2, included with the second bonus here. Included with the second bonus, we give you all the indicators. There's 59 proprietary indicators and scans. Auto expected move. I will give you that here in a moment. I would literally, we're going to give you auto expected move tonight. Put huge weight into that. We'll give you gravity points. Gravity points is a big one. TheoTrade, RSI, Laguerre, Quantix, NQ levels, next generation squeeze indicator, complex position tracker, IV rank versus percentile, Theo Quant setup, unusual put options activity, sizzle index, SPX expected move. Okay, there are a ton of indicators and scans that we offer. We just give them to you. And we give them to you from day one. You literally can download these, put them on your trading application. That's another $1,800 in indicators and scans. Okay, why? Because it's the right thing to do. To top it off, tonight, okay, we're actually going to offer a third bonus. We have another live class coming. Okay, the bottom line is here at TheoTrade, we just keep forging forward. People, it's the middle of summer. Nobody's traveling. We're pushing forward. We just did a class, a new class last week with Corey Rosenblum. Me, I'm back up to bat. This is my class. Thursday, July 16th, 9 a.m. to 11 a.m. The class is going to be about 2 to 2.5 hours. Okay. Gamma irons. Okay. We've never held this class before. It's actually going to be a guide to buying iron condors. People are going to freaking love this class. Okay. Absolutely going to love this class. It is included. Okay. For those that are enrolled tonight. Again, just this class, easily be charged $497 for. We're not. We give you access to the other 93 classes. We give you access to infinity spreads, everything. Okay. And if you tell me right now, you're like, I can't be available on that day. Listen, the course is archived immediately. Like on Thursday, July 16th, the second the class is done, it's already archived. Okay. In fact, listen, you can even download it the second it's done, iOS and Android. So if you can't make it, that's important. And if you've never heard of iron condors, these are gamma irons, totally different side of the business. Okay. And it's hot right now. The strategy is on fire. Okay. Gamma irons. It's your guide to buying iron condors. Okay. First, you're going to learn how to use iron condor strategy from a very unique long gamma perspective and find out what other traders are really missing right now. You're going to learn to take directional bias. There's no bias to the trade. All you say, just take it out of the equation. You can use the power of options volatility to your advantage. We're going to have step-by-step criteria like any other class. We're going to have detailed criteria, how to enter, and how to exit the trade. Nothing's going to be left to the imagination. Number 4 over here, how, okay, and where to find edge in the buy side of irons. There's actually going to be this whole section here on IV, implied volatility, okay? How option, okay, buying options premium in the current market environment using gamma iron condors. Like, why is buying options a good thing right now? It's never been a good thing before, right? And we're also going to go the guide to trading gamma iron condors regardless of market direction. You can use these for incremental returns, retirement accounts, $2,000 accounts. It's fine. Okay, and when I say gamma irons have been hot, here's a strategy, right? These things, they're a little different than the other strategy. These are more about incremental returns, okay? But here's one that was actually closed literally today. So we closed this particular iron condor in the GLD today. What our members are saying, Cynthia out at 236. Again, that's today. HA, GLD filled at 239. Nick filled at 239. Newman, all right. Iron Condor, 5 cents now, 238 profit target. Filled, GLD, 236 and 240. I mean, again, I wanted to show you trades that were live, trades that were today, trades that are now. Here's another one. This is new gamma iron condors, right? Again, this is a brand new strategy. Here's one that I did in the spiders, 245 out for 315. Again, it's small, it's incremental. But you got to understand, we're giving you 3 bonuses here, okay? This is it's a slam dunk. Like what we do here at TheoTrade, we include everything that you're going to need to invest and trade. We give classes, we give coaching, okay? Email access to our instructors. Like nobody's ever wants to answer emails. That's what we do. We spend like 2-3 hours a day answering emails. Hundreds of emails come in a day. Email, live trading room with live trades that we text out, indicators and scans, mobile access. I mean, listen, it's everything that you're going to need in this business. And if there's something that you don't see here that you're like, I could really use this, tell us. We want to know. Like what we've tried to create here, we've tried to create the Netflix for traders. I mean, that's the kind of experience where you can go in there, any genre of trade, anything that you're going to need. Listen, tonight, it's $297 for 3 months. I'm going to make something really, really clear about this because everybody's going to ask it, okay? I'll go through all the details in a moment. It's $297 for 3 months. This is not a membership, okay? It is not a membership. It is one time, okay? It's a one-time charge, $297. It's not an introductory offer. People are like, what happens after 3 months? I'll tell you exactly what happens after 3 months. After 3 months, we send you an email. Do you like us? And go, yeah, man, I've loved what you guys have done over here. Okay, it's phenomenal. Do it again. How much is it? $297. Okay, we will ask you every 3 months if you want to do it again. There are now over 6,000 people at $297 for 3 months. Okay, we built this for volume. We built TheoTrade, okay, because we knew there was nothing else in this entire industry that offers, okay, what we're capable of doing with 7, full-time instructors with the depth of knowledge. Everyone in our crew has over 15 years of trading experience. Every one of those guys has 15 years of trading experience. I mean, Jeff Bierman's been around this industry for 10 years more than me. Slim Miller still has 20 years on me in this industry. Okay? I've been trading since 98. Nevertheless, again, that's the kind of depth and knowledge. Listen, this is everything that we do over here, right? Maximum returns with infinity spreads. That's why you're coming here. Okay? That's why you're paying $297. But we also give you access to over 93 classes. We have new monthly classes. Guess what? The new monthly class? Yeah, it's coming up next week. Okay? Gamma irons. I'm actually relatively excited about that. And this one, I got to tell you, gamma irons, one of the most difficult pieces of criteria to ever put together. It's one of the most difficult classes I've ever assembled. You guys are going to love gamma irons, right? Live trading room. We give you the live trading room. It's 6 hours per day broadcast. We have 59 proprietary indicators and scans. We have push notification and text. By the way, our mobile app has push notification. If you don't have text messaging because you don't like it, we do push notification. All right. We have daily coaching sessions with timely topics. The daily coaching session predominantly is done by Professor Bierman. Why? He's a professor in finance. We thought he was the best to actually teach the class on a day-to-day basis. And we answer questions via email. If you go now, it's theotrade.com/profit. It's PROFIT. okay? O, F is in Frank, I, okay? T is in Tom. TheoTrade.com/profit. You can roll for it right now at $297 for 3 months. Now I'm going to answer a lot of questions here. There's a ton that are popping up inside of the chat room, okay? And I'm going to get those in just a moment. Before I go any further, we'll make it a completely riskless trade tonight. Listen, I just want to make sure that everybody that, you come in here, you sign up for it. We only want people that want to be here. And there's 6,000 people that are currently subscribing to TheoTrade. Now, I'll reiterate again, it's $297. We don't like to do reoccurring charges, okay? It's kind of like the gym. You go to the gym, you pay $99 a month to go to a gym, and how do you get out of your gym membership? You don't. You can't. You can never get out. I hate that crap. And we thought that you did too. So after 3 months, we ask you, do you want to do this again? But to make sure that people want to be here, listen, we'll give you a riskless trade. It's a completely riskless trade. Everything you're going to need to start trading from novice to expert. By the way, I stress novice to expert. One thing I'm going to mention here again in a minute is I'm actually going to bring up TheoTrade site. There's newbie classes, there's option strategies classes, there's technical analysis, there's day trading. Okay, there's trend trading, there's hedging classes, there's futures and bonds. If you name a genre of trading, we have it. When I say though from novice to expert, you want to go to expert, come over here to pairs trading. Okay, you want to be an intraday, you want to day trade a little bit, futures or day trading classes. You want to know more about charts? I'll tell you what, technical analysis, our technical analysis team, they are literally second to none. Apparently I have to log out and log back in. It's been a while, it logged me out. I'll log back in over here really quickly, right? So as you start to actually go through this, again, you can select any number. And by the way, the archives over here in terms of the class archives, any number of class archives. If you want to see what option strategies look like, okay, how many different option strategies classes do we have? Option strategies, this is my genre. Back spreads, volatility crash course, guide to surviving and thriving, black book spreads, controlling your risk. You have access to all this from day one. But you say, I don't even know where to start. Start here. I'll come back to this in just a minute. Okay? But that's when I say everything from novice to expert. We'll give you a money-back guarantee. Trade with us for the next 3 months. If you're not totally satisfied, just email us, support@theotrade.com, and give us the details of your trades. Receive a full refund. When I say this, listen to me very carefully. Satisfied. We don't even define what satisfied means. Okay? It's $297. Okay? If you don't like it after 3 months, we'll give you back your $297. The only thing we say, to make this fair, you have to give it a shot. You have to trade. That is the only thing that I ask. I can't stand the word stipulations. There's no fine print. You got to do 10 trades using any of the TheoTrade strategies and criteria in the next 3 months. Okay? The initial account value, you have to have $2,000 in your account. Okay? You have to follow our criteria. You can't make your own crap up. I just hate the word stipulations. Okay? Those are your stipulations. Do our trades. By the way, we will text more, okay, than 10 trades in the next 3 months easily. Okay? And you have to provide real account statements. You just have to verify to make it fair, because we don't want people coming here watching everything for 3 months, never trading, leaving and going, I'm not happy, give me my $297 back. Okay? We want skin in the game. If you're willing to put some skin in the game and trade, okay, we'll give you a completely riskless trade. I think it's totally fair. I hope you guys think it's fair too. It's completely riskless though. If you're not satisfied after 3 months, seriously, email us. We'll just give you your money back. It's $297. It's not gonna break my heart. And I hope you guys understand, we want you to be happy. That's the only way that this is successful. You come to us, and if you're successful, hop on for another 3 months. We don't make anything in the first 3 months anyway. Okay? Costs us a small fortune just to have, 7 traders on the team. Listen, get into TheoTrade now. We're going to work with you directly. We'll give you 30 spots tonight, 30 spots on the riskless deal. By the way, when I say only 30 spots, you know why we limit it? I have to look back, okay? 30 people, I got to look back through each of them 10 trades. Most people are doing a lot more than 10 trades. There's people that are going to do 50 trades inside of the next 3 months. I have to actually reconcile all the trades. So we give 30 spots in the riskless deal tonight. All right. That includes unlimited email mentoring. Send us your trades. Listen, $297 riskless offer. Okay. Tonight, It's never been available before with infinity spreads. Plus, we're giving you the live Gamma Irons class. All right, the guide to buying iron condors. This is kind of a unique one because, yes, infinity spreads, they are huge right now. But the up-and-coming strategy is going to be Gamma Irons. They've been hitting and hitting and hitting again. So it's completely riskless trade. Again, it's theotrade.com/profit. I'm going to take you to theotrade.com/profit in a minute. Before I do so, I just want to read you guys this, what our members are saying. Take a minute with me here. The reason I'm bringing up this email, this is March 16th. Don, wow. I want to say again, thank you for what you've taught me in the last 2.5 years. I bought into what you taught about risk twist spreads. By the way, risk twist spreads, that's what we're talking about tonight. It's infinity spreads and duration positions, and started to trade options almost a year ago. I missed out on the last market move up. But at the moment, my IRA is up 14.8% for the year. What I've invested in TheoTrade has been so worth the money. Thank you, Brian. The reason I bring up this 14.8%, do you realize that's March 16th? That's the middle, okay, of the largest crash since what? The Great Depression. You got to go back into the 1930s to see a market crash like this. And this gentleman, Brian, is actually up 14.8% on the year. The next one actually comes from a gentleman by the name of Chris. Again, I also selected this email specifically from March 26. Don, I've learned more in the past 4 weeks managing and defending my portfolios than I've learned in my entire trading life. Nothing I've learned would have been possible without having tuned into your teachings for the past 2 years. Also, my atomic hedge, it's a strategy we teach, took a large sting out of my long-term IRA destruction. You clearly don't have to be a teacher, but thank you for doing so. Stay safe, from Chris. And I wanted to detail that because those are 2 emails. It's about saving, life savings. That crap matters to me. In the middle of the biggest crash in pretty much our lifetime, and I get, bombarded with emails, but those 2 really stuck with me. Listen, this is access to everything you get for $297, and I'm going to take you over to the site in a second. I'm also, for those of you that have stayed tuned for the indicator, I'm going to provide you the auto expected move indicator. All right. This is access to everything you get for $297. Okay. Maximum returns with infinity spreads. Those are 2 courses. The first bonus over here, all access pass. Okay. We have a daily live trading chat room, 6 hours per day. We're archived, so you can check it out anytime. We text out trade ideas. We have trading indicators and scans. We have daily coaching sessions with tons and tons of live support. Okay. The bonus number 2, we give you access to 93 classes. There's day trading and swing trading and technical trading, beginners, options, advanced. Okay. I mean, everything. And of course, the third bonus tonight is Gamma Irons. It's buying iron condors. And I just wanted to detail that. If you follow me right now, it's theotrade.com/profit. In fact, I'm going to pop it up here. Follow me to this link for the auto expected move indicator, but theotrade.com/profit. Let me actually pop it up here and kind of maximize this. And I will promise to pull this up. I am going to, I'm going to detail just a few aspects of this. And then I promise I'm going to show you a little bit about TheoTrade, and then I'm going to start answering questions because there's a ton of questions right now. By the way, we're here to answer those questions. You can chat in directly. Okay, you can chat in directly to GoToWebinar, but you can also come in here to the live chat and ask as many questions you may have. So it's theotrade.com/profit. Obviously, our phone number up there. But let me show you a couple of things on here. There are currently 30 riskless trade spots left. I will let you know when 30 spots are filled. Okay. The one thing, and the reason I come to this page and I spend a moment on it, is simply this. I want you guys to know exactly what you're enrolling for. Okay. You get access to every course that we've done. But the Infinity Spread course, okay, we'll give you direct links right to the Infinity Spread course so you can start watching it tonight. The big bonus tonight is Gamma Irons. That's a class coming up July 16th, all right? 10 a.m. Eastern Time, 9 a.m. Central. The class should run about 2.5 hours. The other aspect I really want to detail on this particular page, again, everything obviously is down below. Click right here, add to cart. The reason I spend a moment and click over to the add to cart is I want you guys to understand. There I am. I want you to understand, okay? In this particular, all right, $297, it is not, okay, a reoccurring charge. It is a one-time $297 charge. Okay. It's important because everybody asks that question. It's just $297. It's a one-time charge. All right. So I'm going to come in. I'm going to answer a couple of questions. I also want to give you guys just a minute to, for those of you that were waiting patiently, if you come to the site and you scroll down to the bottom of the screen, right here, the auto expected move indicator, it's down to the bottom of the screen. Okay. So again, this is theotrade.com/profit. I will let everybody know when the 30 riskless trade spots are gone. All right. We'll have some detailed information. I'll know, like I can actually see people enrolling right now. Click add to cart, enroll. I'm going to answer a couple of questions while people are doing just that. But before I start to answer the questions, this is what TheoTrade looks like. This is TheoTrade. This is actually where we broadcast day to day. Down below over here is the chat room. So when I say the chat room, like you just kind of scroll through here. Okay. This is where everybody's actually trading on a day-to-day basis. So there are, thousands and thousands of people in here on a day-to-day basis. And if you scroll through, okay, we had some pretty active trading today. So SPY turned down, watching over here. We're actually talking about some puts that I had. Good day for me in options, got assigned. Okay, that ended up in my favor in this QQQ trade. I did a Q trade today, intraday. It was actually really, really good. Look at this. Terry Lamb got out for 531. Smoked me. Okay, this is MM. Got out of the intraday trade over here. It's good. Good stuff. And by the way, I'm reading some of the questions that are firing into the chat room at the same time. So I just wanted to show you a little bit about the chat room. We broadcast here for 6 hours a day. You don't have to see my mug, my ugly mug. You just see my screen. The next thing I bring up over here is the option strategies. Okay, what our archive looks like. This is where you find, the 93 classes, and these are some of the options. Again, I'm the options geek, butterfly, guide to weekly returns. Listen, if you name a genre of trade, we've got it. You're going to be a little overwhelmed by this, and I think that's okay. I mean, for $297, listen, for your money, I think you'd rather be overwhelmed than underwhelmed. We have a start here menu. A start here, options 101, options 201. Absolute novice, start in here. By the way, even if you're experienced, let me show you something. If you're really experienced, jump right here. Order execution, part 1, 2, and 3. Those three classes alone, okay? I promise every single person in here, $297, I'll save you more than $297 just understanding how to execute your orders. There's one insight that I don't think anybody else in this education business can provide. I actually helped put together the order execution system for Thinkorswim. I understand order execution, okay, to a T. I can help you get better fills in options, stocks, and futures. And that's exactly what we do in this 3-part class. I'm telling you, the most experienced person in here, like, this is pretty basic. Yeah, check out order execution. That'll save you a couple of $1,000s a year knowing that stuff. Then I come to the member home. Come to the member home because we have an archive. Like this is like a Google search engine. You put in a topic in here. Like I always like to play around with this. Like in-out spreads. In-out spreads is always a big topic of conversation around these parts. Come in here to search. Every single session involving in-out spreads will then populate. Okay, it's all in here for you. Okay, it's all laid out. This is what TheoTrade looks like. You get comfortable. We have different portfolios for you. All the archives that you have access to. This doesn't even include the mobile application, which gives you access. Listen, go now again to TheoTrade. Again, theotrade.com/profit. I'm actually going to start to answer your questions. Here's some general questions, and then we're going to get into the really specific questions here in just a moment. I actually see your questions kind of coming through. So, by the way, as you guys are enrolling, I am going to read off names of those that are enrolled to confirm that you're in the riskless spot. And it takes about 4 or 5 minutes for me to see your name. So as you're enrolling, it'll take me 4 or 5 minutes to be able to see your name kind of populate in here. All right, so let's get down to it. A couple of things, a few general questions that we like to answer for you. One of the first things, okay? What do you need here? You need a laptop internet connection. That's it. Okay. When I say a laptop internet connection, we have everything you're going to need to get started. In fact, you know what? You don't even need a laptop today. I like to mention this. You need an iPad or some type of Android tablet because the trading technology has gotten that good. You can watch us on anything. In fact, I'm even using my iPad right now to read your questions. I love it. I trade off my iPad constantly throughout the course of the day. We have everything you're going to need, and we try to support you. And I'll say in this first thing, when people ask, what else would I need? If there is something that you have, like, a need for, and I'm deadly serious about this, email me. I want to know about it. I mean, we're trying to build everything people are going to need to trade, to invest, to understand financial markets, okay, better than any other place on the planet. And people always say, what are you doing with this business? We're filling a need that doesn't exist right now. And that need is simply this. There's no other place you can go in the world that has everything from stocks to options to futures. We're constantly adding more instructors, more classes in here, everything. And that's what we try to be to our clientele. The second thing that always comes up, this is not a membership. We're not going to auto-renew or bill you again. I've probably brought that up like 20 times already. It's $297. If you love us, do it again. If you don't. It's okay. It's not a membership. Number 3, we are now providing Infinity Spreads weekly video. Okay, so people always say, okay, I took this Infinity Spreads course. Now what do? We give you a weekly video. It updates you. By the way, one of the most active weekly videos that we do is Infinity Spreads now. So you can follow all the moves, like everything that we're doing with Infinity Spreads, you can follow it. All right. Number 4, okay, we archive everything. Every word that we speak. We understand that not everybody can watch live throughout trading sessions. So what do? We archive it. We also have playback where you can do 2 times or even 3 times the speed. I sound like a chipmunk. It's kind of cool, but we have fast playback, and we do that on our mobile device. We give you access to TheoTrade Mobile. So tonight, you're going to roll for $297, then you download TheoTrade Mobile, and you can download the archives. By the way, it's really cool. You download the archives. You can watch it when you're offline, view at your leisure. If you're willing to fly right now, you could watch it in an airplane. It's kind of neat. Flying is not on my list right now. Number 6 over here, you can email us anytime. You're going to receive a response within 24 hours. By the way, we're nuts about emails. Okay, just nuts about emails. I was going to say a second ago with this, somebody was already asking about trades being texted out. Enter in a phone number to receive text messages. When you're enrolling, enter your phone number in there. It'll enroll you like we get you enrolled for the text messages. So please enter in your number over there and we'll give you the text messages. But you can email us anytime, trade related questions. On number 6 over here, listen, I want you guys to understand something. We don't shy away. People email us sometimes like, so my friend is in this paper trade and he's thinking about, okay, here's the bottom line on number 6. If you want to email us, be direct. Tell me what you have on. Tell me what you screwed up. Tell me what your position is. We'll help you. There are times I'm going to tell you this is the worst trade I've ever seen. Don't do it. Okay? We will get very invasive with you, and I hope you understand this is trading. You want that, right? We will get in depth, and I am deadly serious. Send us your trade ideas, and we'll help you with them. Number 7, you're going to gain access to every course that we've done in the previous 4 years. Classes, coaching, yeah, everything. Literally everything. It's all searchable. Name any trading topic, and we have an archive on it. Number 8, all the trades that we've done and showed can be done in an IRA. All the trades that we're going to do can be done in an IRA retirement account or with as little as $2,000. Okay. Number 9, we can help you get approved for options. People always say, oh, I joined TheoTrade and I'm in Canada. By the way, if you're in Canada, we can give you ideas for brokerage firms. If you're here in the U.S., there's a couple of brokerage firms that we work with in the U.S., but do not worry about getting approved for options. You're approved. Okay. You got to understand, I worked at Thinkorswim, okay, until it was bought by TD Ameritrade. Some of my best friends work at TD Ameritrade, but a few of them left. One of them actually runs part of E-Trade. Another one of my friends actually runs Tastyworks. You name a major broker, we have a connection there, right? And we have partnerships with these brokerage firms, so we'll help you out, okay? There's actually only 30 riskless spots available. Listen, get results, okay? Hop in, take action. There's no risk to you tonight. Again, I'm going to read off a couple of the names over here. Go to theotrade.com/profit. I want to make sure everybody sees the address over there. Oh, by the way, I wanted to read this off to you. What our members are saying. By the way, you guys are rocking it. Very impressed. Okay, it's really refreshing to have you guys putting this together and sharing knowledge and not upselling everything and turning and burning your customer base. You've got a customer for life in me because of this approach, and I'm sure I'm not the only one. By the way, I love this particular piece of feedback. This one came from Facebook, and I just love it because that's exactly what we're trying to do. I mean, just hit it right on. That's what we're trying to do. I'll pop this up here again and throw the web address in. Now I'm going to answer your questions directly from the chat room. Again, it's theotrade.com/profit. So hang with me here. So, all right, a couple of the questions that are coming up. By the way, those of you that are now in what we term the riskless spots. When I say riskless spots, okay, Vishal C from Ohio, Michael T from Indiana, Lewis R from Tennessee. I don't want to butcher this. Manava S from Virginia. Okay. Bush and J from California, John T from California, Gary D from California, Robert M from Florida, Walter K from New Jersey, James F from Oregon, David Z from New York, Yogesh C from New Jersey, again, Jeffrey B from Florida, Teresa P from Texas, Kevin M from Michigan, Kevinder M from Florida, Mario A from California. So far, again, it takes about 4 minutes before it actually shows up here. So far, all of those names, I think it's about 16 names I just read off. First of all, thank you guys for joining Theo Trade. I think you're going to love it. And by the way, I kick off every morning. We start at 6:22 Pacific time. So 6:22 Pacific time is when we actually kick off. And again, that's I'm on for the first hour plus of your trading session tomorrow. So by all means, join us at that time. Now, some of the questions that have come in here. Somebody said, why don't you do a bullish and bearish shot just to be sure? So the answer to that is that's exactly what we're doing. We are doing a bullish and bearish shot. What I'm actually showing you to make it a little easier in context, I showed you a couple of trades where the bullish side paid off, another trade where the bearish side paid off. But net, the trade is actually on both sides. That's actually what the infinity spread really is. The infinity spread is literally playing on both sides of the marketplace. I always have a downside shot. And then I actually sprinkle in, upside potential in there. And I like it, people. Next question. Oh, what is the normal win ratio of back spreads? So that's actually a really interesting question. I'll tell you why it's such an interesting question. Normally, marketplaces, lower volatility, back spreads don't pay out that well. Back spreads don't pay off that often. Volatility, and I'm telling you, if you look at the entire construct of the marketplace right now, you look at what the Fed's doing, they're throwing trillions in the marketplace. That volatility, people, ain't going away anytime soon. To compound issues, let's throw an election in there. Let's throw world politics on top of all of it. This volatility is going to be rocking. The back spreads, are paying off 4 times beyond what they normally should and historically should. It is a spectacular time right now to be what's termed long gamma. And that's actually why I'm doing the Iron Condor class, because buying option premium right now has just been the place to be. It literally has been the place to be. All right, so I'm going to continue to kind of answer a few more questions over here as I'm actually reading the chat. All right, so back up to the questions. Upside is nice, but when is the downside of this type of trade? So the downside type of portion of the trade is actually the VIX volatility spread, and you're going to learn that. Here's the fun thing. If you watched pretty much the last, the 90 minutes of when I was going into context of the trades, you'll note that the big downside trades, they paid off huge. They paid off in February. They paid off in March. There haven't been really that many downside opportunities since then. So the upside of the trade is what you saw a lot of tonight. And that's why a lot of questions are like, what about the downside? Listen, we're all looking and thinking the same thing, right? When I say we're all looking and thinking the same thing, we're all thinking this marketplace is a time bomb right now. You're so bearish, you're drooling for it, okay? I totally get that. But at the same time, you have to take what you think and extract it a little bit and say like, listen, I'm going to be bullish, I'm going to be bearish. Believe me, I have many, many more, bearish trades that are on right now. And these are what we call outlier trades. Specifically, they're in the VIX. All right, one more, and then we got to wrap it up because I know it's getting late for some people. Again, oh, by the way, I missed one. Aaron P. from South Carolina. Again, these are, thank you very much for enrolling tonight. These are names that are coming in right now. It takes about 4 or 5 minutes before I actually see the name actually come through. All right. Somebody asked you another great question. What kind of account or how much account balance needed for trading? My brokerage allows only long calls and options. So first and foremost, the name in there was a tool. A tool. If you have a brokerage firm that only allows like long calls, we're getting you out of there. Or I'm going to take that brokerage firm and I'm going to get you options approval. Doesn't matter what the brokerage firm happens to be, but if you're having problems with the brokerage firm, if a brokerage firm puts you in a box and says you have training wheels right now, find another brokerage firm. We're all adults here. All right? I'm a giant child, but we're all adults here. And you got to be treated as such. It's your capital, and you need to do the right things with it. So I stress to you, okay, we'll get you the right brokerage firm. You will not be limited. $2,000. And you think to yourself, I can't do that much with $2,000. You can. There's a lot of trades that we do here, like in the XLF, okay? We put like 30 cents at risk. Commissions are negligible at this point. I mean, commissions are nothing. They're so nominal. You don't understand that 15 years ago, that was a big portion of it. You had to learn how to circumnavigate commissions. Now, people were living in utopia with the commission structure. We'll get you the right brokerage firm. If you're Canadian, we'll give you some brokerage firm suggestions. If you're here in the U.S., we'll give you some brokerage firm suggestions. We'll take care of you guys. Listen, IRAs, we got them. Okay? I trade again in my IRA on a day-to-day basis. So again, I've gone way over in time tonight. I want to thank everybody for joining us. First and foremost, those of you that stayed tuned in, and most of you did the entire time over here. Thank you guys for taking the time to tune in tonight. Go to theotrade.com/profit. If you need to get a hold of me ever after tonight, at any point in the future, support at theotrade.com. I want to thank everybody. Okay. Have a wonderful evening. Bye-bye.